Prices. We saw oil prices yesterday actually falling quite substantially, Tom. That on the back of those cuts in prices from Saudi Arabia. But for the moment, we're up a little this morning.
Yeah, FTSE 100 futures currently pointing to gains of around 20 points, 0.3%, looking to hold above that 7,700 level. DAX futures also pointing to gains of around 40 points, Anna.
Okay, so we are looking for a bit of upside at the start of trade. Could see some modest gains coming through for European equity markets. We're pretty flat on the FX market, hence the grey column you just saw there in the second column on the GMM screen. And these are the equity markets just starting to open up. So the FTSE is pretty flat right now, up 0.1%, waiting for more markets to join the fray. In terms of the other clues we're getting from the GMM, as I mentioned, pretty static on the FX story. Despite that disappointing data coming out of Germany, the dollar is fairly flat. The euro took a little bit of a hit on that data earlier on, but has recovered a little of its poise. The sovereign bond column looks entirely red, so we are seeing selling of sovereign bonds and some of those yields going higher. The yield story, yields going higher, not necessarily good for risk assets, so we'll see how that plays out, the relationship there between bonds and equities. And here's a mixed picture on commodities. After we saw that big drop in Brent crude yesterday, or in oil prices generally, today, as I mentioned, Brent crude up by around 0.6% at 76.54. This is the picture then for equities as it develops, looking a little bit more mixed. The Spanish IBEX certainly under considerable pressure this morning, down by 0.6%. Elsewhere, we see a little bit of upside. The FTSE MIB, the German DAX, just up 0.1%. The French market looking pretty flat this morning. Tom, what do you see on the sectors page?
Look, Anna, you've rightly zeroed in on the energy complex, and as a sector, you're seeing there gains of 0.6%. So making up for some of the damage that came through yesterday for that sector, some, but not all, because that sector closed down more than 2% yesterday. But today, you are seeing modest gains around 0.6% for energy. Basic resources, different story there, though. You saw losses in basic resources yesterday. Two sectors in the red by the end of the close, energy and basic resources. It's a tale of two different sectors, though, today. Basic resources building on the losses of yesterday, down 0.2% so far in the session. Banks also off by about 0.1%. It's a mixed picture across the 12 main sectors that we focus in on. Technology is interesting. Look, it's flat so far for the sector, but when you lift the hood, the semiconductor story is going to be in focus for us, certainly. Currently now down 0.1%. Joe Easton is going to be unpacking that story for us because of the linkages to the NVIDIA story on one side, Samsung on the downside coming through with a sixth consecutive quarter of profits declining there. Financial services looking to gains of 0.2%. Industrials also up 0.3. That healthcare shift as well, up 0.4%. There's some individual corporate stories to focus in on there, but it's a mixed picture, really in focus for us. Energy standing out to me currently. Health sector as a bit of a defensive still, also looking interesting with gains of close to 0.4%. On the downside, coming through for banks and basic resources. Top line, Anna, you're seeing gains of just 0.1% across the European benchmark.
Okay, I was just diving into what's been going on the Spanish market, as that did seem to be something of an area of weakness. The Spanish IBEX will continue to do that. Iberdrola is certainly an area of weakness there. Looking at some of the other corporate news flow we've had out this morning, I know that BMW is in focus for us. So BMW sales in 2023 are up 6.5% from 2.5 million units sold, just above that. According to an emailed statement, the company saying they see continued high demand for full electric products, and they expect to sell more than 500,000 fully electric vehicles in 2024. The stock, as a result of that news, pretty flat actually this morning. Let us get to Sophia Halter-Acosta, who joins us from the Markets Today blog and talk us through some of the stories that the team is covering today. Good to have you with us again, Sophia. Let's start with what's going on. Well, in fact, let's start with the build-up to Friday's monthly GDP figures, shall we, Sophia? What do we need to know?
So this is the UK. We're focusing on this because the third quarter reports that came out in late December showed a contraction. So we're really kind of on recession watch in the UK. It doesn't look like it'll be a very strong month of growth. This will be data for November, but it will at least be growth. That's what economists are expecting. The October figures, though, were ugly. I remember when that figure came out, everyone on the blog kind of gasped because, it was 0.3% contraction. Not huge when you consider the context, but the fact that it's very much in recession territory. If we do get another weak report for November, then that sets us up for potentially a recession if growth again contracts in the fourth quarter. I would say people are turning a little bit more optimistic on the UK economy right now. I mean, it seems like the revisions are coming up. The kind of threat of recession is no longer, it's no longer consensus. But really, I would say that, we're talking really rounding errors here. 0.3% growth, minus 0.2% recession, a contraction. It's really kind of borderline. The stagnation of the UK economy is consensus, whether you're on the minus or on the positive side of things. But I think it could be a really interesting report.
Okay, we know you love your rounding errors, though, Sophia. Does the UK consumer ride to the rescue? What have we seen in terms of the consumer strength amongst the retailers?
A little bit of doom and gloom. So even though, if you look at, not all retailers are created equal. So we did see some strength from Next earlier this week. We do have a report, a trading update from Marks & Spencer, a very, very strong performance last year. Let's see if that continues. But broadly, the sector, though, Christmas spending was not brilliant. I mean, consumers spent total retail sales grew just 1.7% in December. This is meant to be kind of the golden quarter for the sector. And consumers didn't spend on big ticket items. I don't know about you, Tom. I don't tend to buy furniture as Christmas gifts. But it was really, this was really where the weakness was. Furniture, homeware, even clothes, jewelry and technology also struggled. These are the more traditional gift categories. I would say food was a bright spot. I like mentioning bright spots.
I'm going to say I like food. I was going to agree with you wholeheartedly.
Especially for Christmas. I mean, it's important. Food sales increased. Affordable luxuries. All that turkey that we bought, Anna, for December, really feeding through to the data. 6.8% increase in the 3 months to December. It shows that people are spending on things that they need and not necessarily on gifts.
Okay. Sophia, thanks very much for bringing us those UK stories this morning. Sophia Horta-Acosta from the Markets Today blog. You can find more on those stories. If you go to the blog, you'll find it on the Bloomberg UK website, or you can type TLIV Go on the Bloomberg terminal. Here's what we're watching out for then today. We start off with Euro area unemployment. That data for November at 10 a.m. London time. The survey consensus lies at 6.5%. We then switch our attention to the US ahead of Thursday's CPI print. At 5 p.m. London time, the Fed's Michael Barr will be speaking on bank regulation. Worth checking out his comments for any lines on the proposed Basel III endgame new rules. Last month, Wall Street's most powerful bankers told the Senate Banking Committee that the proposals would hurt average Americans. Finally, half an hour later, at 5:30 p.m. at London time, ECB Governing Council member and the French Central Bank Governor, Francois Villeroy de Gallo, he'll be speaking in Paris. So there's a bit of central bank chat to watch out for then, Tom. I'm interested in the Eurozone unemployment data is not necessarily going to move markets. It's a bit backward looking. It's for November. It's a lagging indicator around employment, perhaps. But 6.5%. I mean, these are record low levels, so low for if you look back at the history of the Eurozone.
Yeah, and that ties into the relatively high wages that we're seeing in the Eurozone. We know that those negotiations in many countries, including Germany, continue as well. And that is a concern for some economists, at least. The higher wages could see inflation remain elevated. But of course, the European Union, or at least the ECB, has made significant progress, arguably more than the UK, in getting inflation back to target. The other inflation print, of course, is the CPI out of the US. And worth noting, core inflation expected to come down to 3.8%, below 4% core inflation. So that's going to be interesting as well out of the US.
And that data point later on this week, of course. So we'll keep focused on that. Coming up on the programme, we will get back to the Eurozone and home in on Germany. Germany's industrial production has fallen for a 6th consecutive month, adding to recession fears in Europe's largest economy. We will discuss that. Holger Schmieding joins us with analysis. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Next week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As markets anticipate a dovish pivot by central banks, policymakers grapple with two wars on the global stage, and AI continues to dominate the tech headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Coverage begins next week, only on Bloomberg Television and Radio.
Happy Tuesday. This is Markets Today. We're 11 minutes, almost 12 minutes into the European trading day. Drum roll, the benchmark is flat. But you lift the lid, it's a bit more interesting on an index by index level. You're seeing some pretty decent gains across the FTSE 100, up 0.3%. Spain, though, the IBEX down, currently a little over 0.6%. Let's get more detail, more granular detail now with Joe Easton from our equities team. Joe, what's standing out to you?
So we're going to start in Spain, actually, Tom, and we're looking at Grifols because there's breaking news of a short seller report on this Spanish pharmaceutical company. It does blood plasma drugs, and Gotham Research says it is going short that stock, and as such, we haven't got a price yet. It's gone into a volatility trading halt, but on the German Tradegate exchange, it is down as much as 16%. They accuse the company of inflating some of their assets on their balance sheet. Grifols is working on a response. We expect to see a statement from them anytime soon. We have reached out to them, so do keep an eye on that one. We may even get a price on it as I continue talking. In terms of the other pharmaceutical stocks, Novartis doing a $9 billion deal. We saw that announced overnight. This is in the muscle deterioration industry, an unexpected agreement that was reported by the Wall Street Journal. We'll wait for a confirmation on that one. And we did have some earnings guidance from Merck KGaA, the German Merck. They were actually lower than expected, but we're seeing the stock holding up, so potentially that is already priced into the market. One stock absolutely tanking in London is Jupiter. Some weak flows in the UK is what they're saying. That's what analysts are worried about at the moment. Keep an eye on that one, absolutely tumbling here in London. And an unexpected move across this sector we're going to look at now is in Recruiters. A profit warning from Hayes out of London, down 15%. Fees in the UK in the last quarter, down 17%. We talked about some positive readings on the UK economy, but this is clearly negative. They say the UK recruitment market has deteriorated. We're seeing drops in Page Group, Robert Walters and Randstad as well over in Amsterdam. Adecco in Switzerland hit. All of these companies are sliding following this profit warning from Hayes in the UK. We had to take out chips, which ruined all my chips puns. I was going to say Nvidia chips are cheap as chips. I think we may have done that one before, but I've had to remove all my puns, unfortunately, which is very disappointing. In terms of some other stocks we're going to have a look at, we've got some broker moves, but also a couple of other earnings bits on the screen. I know we've got bpost, that one is declining a lot. We'll bring that up. But firstly, Pirelli out of Italy, their biggest Italian investors increasing their stakes as the Italian government tries to stop Chinese companies buying more of that company. It is an important firm for the Italian auto space. bpost, as I mentioned, downgraded at Jefferies. They say it's worth 380, trading at 420 at the moment, down 11%. They've been buying that one since 2020. A couple of other broker moves in Germany, United Internet and DWS, moving those stocks this morning.
Thank you very much. Lots for Joe Easton to focus on this morning, and exciting markets to discuss. From our equities team, Joe Easton with a briefing on all of the movers in a host of sectors. Let's turn to the German economy now, shall we? German industrial output unexpectedly declined in the month of November, adding to persisting manufacturing woes in Europe's largest economy. Production dropped for the 6th consecutive month as manufacturers struggle with costly energy, higher global interest rates, and a slowdown in China. Joining us now with his perspective on the German economy and more broadly, Holger Schmieding, Chief Economist at Berenberg. Holger, very nice to have you with us, because many people focusing in on Germany at the moment, and this is a story that's been going on maybe for the last year perhaps. Some people referring to Germany as the sick man of Europe. A lot of people quoting the very obvious negative data picture that we've had out of Germany. You push back against that, and it's important to say that you were the person who coined the sick man of Europe phrase back in the late 90s.
Yes, exactly. In the late 1990s, the German economy was really going down the drain, overburdened by the costs of unification. Now we have a very different situation. Germany has one of the strongest labor markets in the advanced world. Unemployment is rising a bit, but what is often forgotten, employment is continuing to rise nicely in Germany. We have the strongest fiscal position in Germany of all major advanced economies. So Germany can afford to take a hit. And it is, of course, in a cyclical sense, not in a long-term structural sense. In a cyclical sense, it's taking a significant hit last year from the downturn in global trade, from an inventory correction in manufacturing, which is when companies produce even less than they sell. And the month of November may well have been close to the trough. Germany was in recession last year, yes, but the indicators are starting to stabilize and to turn up. Even in Germany, industrial sentiment published yesterday by the European Commission is still bad, but it's the least bad since July.
Okay.
IFO is turning up, so we are bottoming out in the German economy.
Yeah, I guess the challenge would be with multiple maybe, but the retooling and the re-engineering of this economy that's needed at a time. You talk about the fiscal strength of the economy, but they can't unleash that fiscal strength because of the court jurisdiction, or at least the court ruling around the budget cap. That fiscal strength cannot be put to play, and that's part of the challenge.
That indeed is part of the challenge. Germany needs in the longer run to overhaul its fiscal rules, which are more restrictive than they should be. But remember, the German economy is driven not by the government. It's driven by its small and medium-sized enterprises, the so-called Mittelstand. They are one of the best innovation engines in the world. All these many, many little companies looking for the next market niche. And we see in the numbers that a lot is going on in terms of structural change. Yes, energy-intensive, chemicals is down, but in other sectors there's quite a lot going on. Like earlier challenges, Germany has faced many challenges. If the government does not get in the way too badly, the German economy will adjust.
Okay, so you're suggesting then that it's taken a cyclical hit, but there are these structural issues that you even referred to there, Holger, and I'm thinking about the higher energy costs that the German economy now faces, and also thinking about the focus that's been on trade with China, and that looks perhaps structurally, geopolitically challenged right now. Also thinking about car manufacturing, doesn't need as many people as it used to if we're moving to an EV world. You don't think these throw the German engine off?
No, they won't throw the German engine off. It is, of course, serious structural change that's happening. But remember, this structural change is at a time when most companies complain about a shortage of skilled labor. That is, it's actually good. You could say if parts of German industry, you mentioned the car industry, need less skilled labor because there are other sectors who would love to get the skilled labor. So structural change is serious. The German economy is adjusting. It's not painless, but it's much less painful than it used to be in the past when you had shifts in the structure of an economy and high unemployment.
Does that tight labour market then lead to sustained wage increases, which keeps the ECB on hold at 4%? Is that a potential risk? Higher rates for longer?
That is a potential risk. If you ask at the Bundesbank, that's probably what you would hear from that. It probably means in practice, this year, inflation is going to fall further. Lots of nice base effects. Energy will be cheaper this autumn than last autumn, probably. Inflation will probably dip briefly to or below 2%. The ECB will cut. But then the longer-term issues, persistent wage pressures, will show up over time in core inflation. And as a result, the ECB will probably stop cutting rates much earlier than most other analysts expect.
Okay, before we get to that bit, Holger, when do they start cutting? Because I'm interested in the sequencing. Some people say the ECB would have reason to go before the Fed because of weaknesses in the Eurozone economy. Others would say they don't want to move without the cover of the Fed.
I don't think that at the ECB they look that much at the Fed. That's often a story you hear in markets which are often focused on the Fed. No, the ECB looks at its own big economy, which after all is not that much smaller than the US economy. It looks at its own economy. It is seeing that core inflation and headline inflation are coming down, but they also see the wages, which means they'll probably hesitate a little longer. And wage increases in the Eurozone are now at their peak, well above those in the US. So I think they'll start cutting in the third quarter, and they'll stop cutting in the second quarter of next year, probably taking the benchmark rate, the deposit rate, from 4% now to 3% by the middle of next year, and then settle at that rate.
Holger, before we let you go, how much divergence do you expect to see across the Eurozone economy this year, nation by nation? Is there going to be significant divergence? Where is your lens?
There is always significant divergence, but this year will be less divergent than usual because the very weak part, Germany, German manufacturing, global trade driven, will probably return to significant growth by the second half of the year, whereas Greece, the outlier on the top end of growth, will just continue to grow nicely.
Holger Schmieding with an optimistic case for the Eurozone and, of course, Germany as well, pushing back on the sick man of Europe characterizations. Holger Schmieding, of course, chief economist at Berenberg, who coined that phrase back in 1998. Holger, thank you very much indeed. Coming up, Samsung's profit woes persist as it reports a 35% fall in operating income. We unpack that story for you next. Stay with us. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rates World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back. This is Markets Today. 23 minutes into a European trading day that's actually quite varied across these different markets. Flat overall, but that hides some divergence. We're seeing that the FTSE 100 is up by 0.2%. Some real weakness coming through on the Spanish IBEX, and the CAC 40 down by 0.2%. Let's turn to tech themes this morning. Samsung has posted its sixth quarter of declining operating profit, reflecting weak global demand for electronics and the chips that power them. For more, let's bring in Bloomberg's tech reporter Aggie Cantrell with analysis. And Aggie, let's start with Samsung. What can you tell us then about this sustained period of weakness for this big tech giant?
Hi, Anna. Yes, analysts were expecting there to be a decline, but the sense of how large that decline wasn't really apparent until the preliminary earnings came out yesterday. Analysts were expecting a 24% drop in operating income, so the 35% drop was actually still really a shock for the company and for people who are trading it. And so what we've essentially seen here is that the company has an issue with the ongoing issue with the lack of consumer demand in the smartphone business. However, there is an expectation that that's going to recover. But as well as that, there's also the question around the chip foundry business and how much they're investing in it versus what they're actually able to get out of it. But the thing that is interesting looking forward to 2024 for the rest of this year for Samsung is that they are also one of the companies trying to capitalize on the AI boom when it comes to being able to produce AI chips or chips that have abilities to process AI. And that is a key focus of the company. And that is what investors are going to be paying attention to when the full earnings come out on the 31st of January. It's going to be about what the company is committing to in their long-term strategy, especially around artificial intelligence.
Well, investors certainly paying attention, as you know, Aggie, to NVIDIA's release yesterday of these new AI chips for PCs. What are the details there? Because that gave, of course, the stock another big lift.
Yes, absolutely, Tom. So a really interesting thing about NVIDIA is essentially that for a long time, they were really known as the chip maker for gamers, for PCs. And then last year, what we saw was that actually their ability to provide chips that would retool data centers so that they could process AI and train AI models was actually what had given the share price such a boost last year. But now what they're trying to do is essentially present these updated chips for PCs to allow for on-device AI processing. And that is a crucial point in the progression of artificial intelligence advancement this year, is that it's not just based in data centers, but rather on the devices that people hold in their hands and have at home.
Aggie, thanks very much for the update. Bloomberg Tech reporter Aggie Cantrell. A lot of people focus on where the AI story moves from here and commercialization of it. More on the market still ahead. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back. This is Markets Today. We're 30 minutes into your European trading day. Let's get to your top stories. Boeing 737 MAX 9 fallout continues as United and Alaska Airlines find loose bolts on some planes, dealing another blow to the troubled plane maker. Samsung's profits drop for a sixth straight quarter, while Nvidia surges on new AI chips for PCs. And German industrial output unexpectedly shrinks in November, notching up a sixth consecutive month of declines.
Okay, we check in on these markets then. European benchmark is currently down 0.1%, a little bit more interest on an index-by-index basis because you have the Spanish IBEX currently down almost a full percentage point. So clearly the outlier across your main European indexes. The FTSE 100 at 7,704, up 0.1%. Across your sectors, healthcare, one of the key gainers, the top gainer, just up 0.6%. On the downside, real estate down 0.6%. Let's check of your sectors. Anna.
So those are the markets that we're looking at this morning. Flat overall, as Tom was saying, but a bit of divergence under the hood. Let's move on to one of the big corporate stories of the moment. Boeing has issued new guidance to airlines on what inspections are required to prevent another mid-air fuselage blowout like the one on Alaska Airlines late last week. This comes as United Airlines said that it had found loose bolts and other parts on the Boeing 737 MAX 9 plug doors during inspections. Shares in Boeing fell almost 8% yesterday as a result of this story. That's the biggest drop in their shares since October 2022. Let's bring in Bloomberg's Siddharth Phillip, who joins us now to talk about this. Sid, very good to have you with us. So clearly this is a business under pressure. Tell us a little more about these loose bolts and loose parts that have been found.
Yeah, so at the moment, it's still a mystery about what actually went wrong with the Alaska plane. And what did happen was an exit plug that plugs an emergency exit fell off an aircraft. And that is basically led to the grounding of the MAX 9 with those exit plugs as the FAA and other regulators asked airlines to sort of make checks in order to be able to be sure that that incident can't happen again. In the inspections that have happened since, both United and Alaska have talked about how they found loose bolts and other parts on those exit doors. So it is something that is being watched at the moment as to see how quickly these aircraft can be put back into service and how quickly Boeing can recover from this.
Yeah, and as you say, as these investigations continue, the risk for Boeing and the airlines, frankly, is that they find more defects, and that seems to be what's happened in the last 24 hours or so. How significant, how damaging is this, do you think, for the company, for Boeing, at this point?
So at the moment, it's still early days, and we need to see what really went wrong with the aircraft before you can really make an assessment. But the NTSB, which is investigating this case, hasn't really ruled out widening the probe into what went wrong. And so it will be interesting to see how it proceeds in the coming days and whether or not Boeing can quickly get these aircraft back in the air and flying again.
One element of the story that has really taken off online is the fact that an iPhone was sucked out of the plane whilst this happened, along with the door, and was found completely in working order. Sid, how does this happen?
Yeah, it's one of those mysteries, again, along with the bolts, as to how this iPhone landed from 16,000 feet in the air without a broken screen or anything else. And that's really been one of the big discoveries from this incident, is the fact that they can land without breaking, although I keep dropping my phone and it breaks already, so I'm not quite sure.
16,000 feet. Normally it just takes a couple of feet to smash your iPhone screen.
I know.
But somehow
So we feel like we've learnt more about the iPhone perhaps than we've learnt about the Max 9.
Yeah, I want to know what case it had on it.
Yeah, we'll have to find out. Sid, thanks so much. Thanks for bringing us the story. We will, of course, continue to monitor that. Siddharth Philip joining us with the latest on the aviation sector. Now, over to European politics. A new French Prime Minister should be named by President Emmanuel Macron this morning after Elisabeth Borne resigned last night. Her position had become difficult since the controversial immigration law in December and the lack of majority that the party has in Parliament. With more on this story, Bloomberg's Caroline Conan joins us from Paris. Caroline, good morning. So why did the Prime Minister resign, and who's the likely successor here?
Anna, after the drama around the immigration reform last month, Elisabeth Borne kind of knew that she had to go, that her position was very, very difficult to maintain. Over the past year and a half since she's been a prime minister, she had to use this constitutional provision in order to force through reforms through parliament without votes more than 20 times, including with the controversial pension reform. Then during these discussions on the immigration bill, she had to get the support from the Republicans, and the bill was also supported by the National Rally of Marine Le Pen, something that was almost unbearable for the more moderate part of Macron's camp. So a new prime minister in order to give a new momentum for 2024. This is what Emmanuel Macron is looking at. One name is emerging as the favorite. It's the education minister, Gabriel Attal. He's very young, 34 years old, and he's very popular. In fact, he's become, in just 6 months, the most popular politician in France. He's only been education minister for the past 6 months, but he's already gained massive popularity with banning, for example, the Muslim Abaya dress from public schools. Also talking about putting the uniform into French schools, which would be quite revolutionary in France, and also trying to propose a law to fight harassment in schools. So huge gain in popularity for this minister. We'll see if he's the one chosen, probably late morning today. The only problem, if he's named, is that he would take some of the spotlight away from Emmanuel Macron.
Who himself, of course, was very young, historically young when he took office. 34 years old for the potential prime minister. We'll see when that name is announced. What does it mean for the reform agenda of Macron then, Caroline?
In theory, the heavyweights in the French government, such as the finance minister Bruno Le Maire and the interior minister Gérald Darmanin, should remain in place. So that's not a big change there, but of course you still have this lack of majority in parliament that will make it difficult to pass through major reforms, even if you have a change of prime minister, because at the moment Macron is not talking about calling early elections, and you have a lot of challenges. Of course, this year you have the Paris Olympics, where obviously all eyes will be on France this summer, and you have the European elections in June, where the National Rally of Marine Le Pen is leading in the polls in France with about 30% of voting intentions compared to less than 20% for Macron's camp. So that will remain a lot of challenges for France, with a lot of political uncertainty, even with this reshuffle.
Caroline, thank you very much. Bloomberg's Caroline Conan with the latest on French politics. Let's stick with politics, but in a very different geography. Tensions with China are at the top of voters' minds as Taiwan prepares to elect a new president this Saturday. As the three contenders make their final push to whip up support, Bloomberg's Stephen Engel reports from a rally for the ruling party candidate.
Taiwan's presidential election campaign is into the home stretch ahead of Saturday's critical vote, with rallies across the island this week. Strained relations with China and talk of possible war make this one of the most consequential votes Taiwan has ever seen. We traveled an hour southeast of Taipei to Yilan, where the ruling DPP met its faithful in a raucous evening rally. Now, unlike the opposition KMT and TPP parties that favor closer links with mainland China, the incumbent DPP prefers maintaining a status quo of de facto self-determination. and building a fairly sovereign Taiwan identity internationally.
Taiwan President Tsai Ing-wen here in Elon stumping for the candidate she hopes will replace her after 8 years in the Taiwan presidential office. That is her vice president, Lai Ching-te.
Two leaders Beijing has branded as separatists. China has repeatedly warned that any pursuit of independence could lead to military action against Taiwan.
Warships and fighter jets keep coming from China as intimidation. When we have such an aggressive neighbor, we must protect our territory.
China has definitely interfered in the run-up to the vote. Missiles and fighter jets are some examples, but it only pushes people to vote for the DPP. Sometimes the interference is simple and obvious, like through TikTok and other social media platforms. I want more legislation on national security. It will be safer, especially cybersecurity-wise.
Taiwanese are distinguishing between autocracy and democracy in this election. People are worried about casting the wrong vote and losing freedom and democracy for generations to come. This is why people feel this election is so significant.
I support independence. There are challenges facing Taiwan to gain international recognition. But Taiwan does deserve a place in the international community, not blocked by China.
Yes, but does a live victory mean we're closer to war?
I don't believe so. If China wants to attack, China would have attacked long ago. Taiwan is actually very easy to defend. Taiwanese people want to continue to rule itself.
Stephen Engel, Bloomberg News, Elon, Taiwan.
Okay, and Steve will be reporting from rallies for the two main opposition parties, the KMT and the TPP, later this week. That's as our special coverage of Taiwan continues in the lead-up to that consequential vote. Coming up, US Secretary of State Antony Blinken's been meeting with Israeli leaders in Tel Aviv as he discusses efforts to avoid a regional conflict. More on that next. This is Bloomberg.
Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology. And welcome to Balance of Power.
This is Bloomberg.
Welcome back. This is Markets Today. 43 minutes into a European trading day that shows a bit of divergence. Overall, the Stock 600 down 0.25%. The FTSE 100 is flat this morning. The CAC 40 and the Xetra DAX both down around 0.3%. Now, the US Secretary of State Anthony Blinken has said Houthi militants in Yemen must know that they will face consequences if they attack ships in the Red Sea. He was speaking in Saudi Arabia after talks with the Saudi Crown Prince.
We've had 40 countries come together to make clear that what the Houthis are doing has to stop. And we have other countries that have made clear that if it continues, there have to be consequences. So our strong view, our strong preference is that the Houthis get the message that they're receiving from countries around the world that this needs to stop. And that's what we're focused on.
Let's bring in Bloomberg's Middle East and Africa anchor, Yusuf Gamel El-Din, who joins us now. Yusuf, good morning. So on the ground, fears that the war could escalate after a senior Hezbollah commander was killed in Lebanon. Talk us through the latest fears there.
Well, Anna, so Wissam Tawil was apparently killed while he was in his car. That's according to AFP. Hezbollah did not elaborate on the circumstances of his death. But what is clear is that the rhetoric from the Israeli side is becoming more bellicose, and the skirmishes are still ongoing along the border between Lebanon and Israel. So there's a nervousness as the U.S. Secretary of State Anthony Blinken arrives in Israel and has those deliberations with Israeli officials. The U.S., it appears, has been indicating that they want Israel not to get involved in any wider conflagration. But again, at the moment, tensions are very, very high, especially since this is the second time such a strike takes place after last week's events. Guys?
Yusuf, we were hearing there from the Secretary of State talking about the Houthis and this coalition of countries that are demanding that they stop these attacks on shipping companies. What is the latest when it comes to the security situation in the Red Sea?
Well, the thing is that it's not clear how safe that passage is. That's kind of a judgment call that is being left to make for companies around the world, shipping companies specifically. And COSCO, one of the larger shipping giants out of China, they made a call saying we are no longer going to send ships to Israel. That news came across overnight. Diversions as a result of the attacks are forcing these ships to sail thousands of miles further. Now, Drury says 822 ships, or the equivalent of capacity of 10 million containers, have been impacted by the attacks and resultant diversions. The Lunar New Year kicks on February 10. So there's going to be, in the run-up to that, a lot more calls for ships at a time when supply is getting more and more fragile. So that could have some more significant implications for shipping costs in the coming days. We will continue to monitor.
Thanks very much, Yusuf, for the update. Bloomberg's Daybreak Middle East and Africa anchor, Yusuf Gamel El-Din, with details from the region. Let's get to some of the other top stories on the Bloomberg terminal this morning. A Chinese billionaire who made his fortune from online gaming has emerged as one of the most significant non-American holders of land in the U.S. Data from the Land Report shows that Chen Tiankao owns 19,000 acres of Oregon timberland. That makes him the country's 82nd largest property owner. Foreign ownership of U.S. land has become a sensitive political issue in recent years. Jefferies fell post-market after fourth quarter profit and revenue dropped in what CEO Richard Handler called a trough year. The first major investment bank to report earnings had some good news, though. Debt and equity underwriting both performed better, helping lift investment banking revenue in a possible sign of a return to deal-making. The results offer a first glimpse into how Wall Street's biggest banks navigated higher interest rates and geopolitical concerns. Barclays says its global headcount dropped by about 6% over 2023. It's the most visible sign yet of the bank's cost-cutting push. Most of those affected are within the group's support functions, reflecting the removal of management layers and improved technology and automation capabilities. But the lender also says it continues to selectively hire front office roles in key businesses.
Now, OpenAI has publicly addressed a lawsuit from the New York Times in a strongly worded blog post. The company says the newspaper's complaint was, quote, not telling the full story about its use of data from the Times. The suit, filed in December, claims OpenAI relied on copyrighted articles to train its ChatGPT chatbot. Novartis is reported to be close to acquiring Cytokinetics and its promising heart drug. According to the Wall Street Journal, the deal, at a market value of about $9 billion, could be finalized as soon as this week. The potential takeover comes as big pharma companies continue to snap up fast-growing biotechs to improve their drug pipelines. And Fujitsu's facing calls from British lawmakers to be banned from new government contracts. The company is embroiled in a scandal around its Horizon computer system used by UK post offices for 2 decades. Hundreds of post office branch managers have been prosecuted, bankrupted, or jailed due to discrepancies appearing in shop tills. Fujitsu says it has apologised for its role in their suffering and is fully committed to supporting the inquiry.
Coming up on the programme, the former bond king sours on bonds. We'll discuss Bill Gross's latest market positioning around the US 10-year. We'll talk about that next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
This is Bloomberg.
Welcome back. This is Markets Today. We are 52 minutes into your Tuesday European trading day, of course. Currently, across the benchmark, you're seeing losses of 0.2%. There's been a short seller report into the Spanish company Grifols. A couple of lines coming through from that company now saying that they are aware of what they're describing as recent false information being published. Grifols saying that they categorically deny and reject any allegations. The stock currently not trading. We wait for that, of course, once that does happen. But that's the denial coming through from Grifols on the back of that short seller report.
Yeah, that's the biotech business. Elsewhere in Spain, we see weakness, but a lot of that to do with some ex-dividends, some big ex-dividends in that market. So the IBEX currently displaying down by more than 1.1%, but that's part of the reason. Let us get into what's happening in broader markets now. Bloomberg's Justina Lee joins us with a look at some of the themes in focus. Good morning to you, Justina. Let's start with Bill Gross. So he says that the 10-year Treasury, I think it is, overvalued. So he thinks that what prices should be lower and the yield should be higher than it is now.
Yeah, I mean, he didn't really elaborate that much, but I think it really gets at the debate in markets right now, which is like, you know, have fixed income traders kind of gotten ahead of themselves when it comes to pricing Fed rate cuts? Because, you know, earlier we did have a lot of policymakers from the Fed pushing against, you know, just how aggressive the market is expecting the Fed to cut. And I mean, it is kind of pretty surprising of how kind of the pricing still is given, you know, the jobs numbers we've seen.
Yeah, currently the 10-year at 4.03. JP Morgan strategist there yesterday putting out a note released over the weekend suggesting that the 10-year could get down to 3.25 or around that level. But by the end of the year, as you say, that debate remains lively. And part of it is informed by the Fed speak as well. We've heard from a couple of speakers yesterday. Anything there that moved the dial, Justina?
Well, Fed Governor Michelle Bowman kind of tried to say like everything, cover every scenario. Yeah. But I think the takeaway is she did say, you know, they could consider cutting rates kind of lower, like kind of later down the road. But at kind of currently, she sees inflation going back to 2% based on where rates now. And she also sees the possibility of rate hikes, you know, should inflation kind of not come down. But I think from what we've heard from Fed policymakers lately, it seems like they're happy with the restrictive stance right now, but they are sort of open to maybe considering rate cuts down the road. So it's kind of doesn't exactly resolve the debate there.
Yeah, exactly. It feels like we're still caught in that debate, doesn't it? Because we did hear at the back end of last year a number of Fed officials trying to push back on market expectations about rate cuts. The market wasn't listening too much in all the euphoria at the end of 2023. Maybe we were listening a bit more last week, and some of that labour data maybe helped. But as you say, we're still throwing around the same theme, still wondering just how many cuts. But a lot of people agreeing that the market pricing looks really aggressive.
Yeah, exactly. I mean, obviously, with kind of the policy rate at where it is right now, you could kind of maybe do a few cuts without it becoming, you know, full-blown easing. But I think with markets now pricing in, I think the Fed funds rate like 1.3 percentage point lower by the end of this year. I mean, you're not just talking about kind of getting policy to be less restrictive.
That's a lot of cuts if the economy doesn't fall off a cliff. So therefore, is the expectation that the economy falls off a cliff, I suppose?
I think that's what the bond market is telling us, but it doesn't seem to be what the equity market is telling us.
I guess the moves could come through from the CPI print as well later this week. What are you going to be looking for when it comes to that data point?
I mean, generally, economists are expecting, you know, the numbers to kind of stay around roughly where they are with a little bit of easing in terms of the core figure. And so I think generally people are seeing inflation kind of getting down to where it is. And I think there are some people wondering, I mean, could it even surprise to the downside? I think that would be kind of another catalyst for a bond rally.
Justina, thank you very much. Bloomberg Markets reporter Justina Lee joining us there on the markets. And in terms of where we are on the markets this morning, a little bit of volatility, Tom, this morning. The Stock 600 down 0.2%. The FTSE, only one of the majors holding its head above the flat line. Elsewhere, we are seeing a bit of weakness coming through. It's maybe overstated in Spain, given the ex-dividends we have, but also the lies around griffles of interest. But broadly, we go towards the US session with low expectations there as well. US futures pointing lower.
S&P E-minis down by 0.3%. Of course, after a decent session yesterday, gains of more than 1% for the S&P yesterday on Wall Street. The Nasdaq, of course, ending up more than 2%. We continue to watch all the market moves. Of course, the data coming through out of Germany this morning, and we look ahead to further Fed speak later this week, and of course the CPI print on Thursday. That is it for markets today. You can get insights from us and the team on the front page of the Bloomberg UK website. Plenty more coming up. This is Bloomberg.
We had a long-standing presence here in Houston for the past, I would say, 20-some years. since the compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
Wall Street is waking up. Europe is already trading. And Manus Cranny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money around the globe. Take a daily deep dive into risk and help you make informed decisions for your trading day. Watch Bloomberg Brief, weekdays at 5 a.m. Eastern, only on Bloomberg. Context changes everything.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Boeing 737 MAX 9 fallout continues as United and Alaska Airlines find loose bolts on some planes, dealing another blow to the troubled plane maker. German industry shrinks for a 6 month as recession looms in Europe's biggest economy. Plus, the French Prime Minister, Elisabeth Borne, steps down as Emmanuel Macron seeks fresh momentum for his agenda ahead of the European elections in June. So welcome to the program. We have a lot of market moves, actually, so let's take a look at the European markets map. Now, of course, a lot of the focus is on data print in the U.S. a little bit later on this week. European stocks, for the moment, resuming some of the declines, certainly that we saw last week, shrugging off some of the tech-led gains that we saw earlier in the day. Now, we're looking at markets, of course, across the globe. What that means is that the tech is supporting, for example, some of the Japanese stocks. Now, U.S. Treasuries, I think, is probably one of the most interesting parts of the markets. This is, as we also heard from Bill Gross, a former bond king, saying that he thinks they're overvalued and that shorter end notes would make more sense for those interested in the market. So for more on what's moving the markets, we're also joined by Freya Beamish, Chief Economist at TS Lombard. Freya, thank you so much for joining us. Look, the focus is firmly on actually what's happening with treasuries and whether the market is getting ahead of themselves and pricing cuts. Where do you stand on this?
For the long term, we're very much in the camp that this is a secular bond bear market, that there's a whole bunch of different kind of secular forces that suggest that yields should be higher, and that that average should be maintained higher in the kind of post-COVID cycle than in the 2010s. So kind of we're moving to a world of supply side shocks rather than demand side shocks. We're living in a world where there is greater kind of cost push pressure on wage growth, so inflation will be sustained higher. We're probably also the positive side of that is that we're probably moving to a world of higher real growth in developed markets as well, and there's a whole shift in the dynamic between kind of saving flows out of China and Japan into the rest of the world, which has been historically an anchor on global yields as well. And all that kind of is changing. But I think in terms of the cyclical story, we are still looking at a story, certainly for Europe, of weak growth this year, and for below trend growth of the US. Now, there's kind of two types of analysis that we do for the 12-month outlook. For the shorter term, we're looking at the kind of the survey data, and we're looking at the shorter term kind of leading indicators. And that's actually telling us the U.S. story may come into a little bit of a wobble, whereas the kind of the European story is looking more towards the trade data, which looks to be bottoming out. These are things that I think will turn out to be false signals, but I think markets, given the price action that we saw towards the end of last year, will be looking to that type of data to sort of push back a little bit against those kind of shorter term, those moves that got priced in towards the end of last year.
But Freya, it's incredible to think that, you know, the mood about the U.S. economy feels very different to what it did even a year ago, where everyone was, or most people were expecting actually a recession, and a pretty big one at that. Now, Odd Lots also spoke to Lael Brainard on what it will take for inflation to come down further. Here she is.
Some prices have not come down, and we're fighting pretty hard to get those prices to come down. One area that really is difficult for Americans is healthcare affordability.
So if we look at, we're also, of course, an election year, Freya. If we look at what the Biden administration could do to try and address the high cost of living, do you worry about debt 4, 5, 6 years from now?
I'm less worried about government debt, and that might sound strange given the kind of the issuance profile that we're seeing. I think it's part of a much broader shift that will go hand in hand with higher nominal GDP growth. So when I'm thinking about the sustainability of debt and kind of support that Biden might want to offer, and the kind of the large packages that we've seen kind of coming through, I'm not just looking at that side of it. I'm not just looking at the kind of the liabilities that are being pumped out, which they are, but I'm also looking at how does that affect nominal GDP growth, and what are the other kind of secular forces that might affect nominal GDP growth. And as I said, I think inflation is going to be higher. I also think real growth is going to be higher. So as long as you're kind of the old calculus is the R minus G, your real growth versus your interest rate versus your growth rate. And as long as those two things kind of balance up, then your debt sustainability should be okay. So I'm less worried about that side of it, to be honest.
Freya, what do you think the ECB does next? And again, if you look at the politics of it all, I mean, we have a council president that's actually running at the European elections, so there's going to be the Germans and the French having to figure out who they probably put in place, with Emmanuel Macron also actually saying that his prime minister has left.
I'm very worried about the ECB policy this year. I think a lot has been priced in. If they were to actually do that, that would be great. Whether they actually kind of come through with that is more kind of questionable. And both, I think what's underappreciated is the impact of what they're doing with the balance sheet. So interest rates to me are clearly too high, and they're too restrictive for the economy. But looking at the QT side of things and the idea that they might actually speed up the process of contracting the balance sheet going into the second half of the year, I'm not thinking that will actually happen, because the contraction of the balance sheet that has happened so far has already been very, very sharp. And if we look at the turnover of money in the economy, I think this is where our kind of bigger picture analysis comes in. The turnover of money in the economy, it's already quite stretched. So I'm thinking like the velocity of money in the economy. And for Europe, we're already back to those kind of pre-COVID trends, just looking at the size of nominal GDP versus the amount of money there is in the economy to operate business. That's already quite stretched. So the idea that they're going to continue with that and even accelerate it is going to be a constraint on growth, even if they're sort of looking at the interest rates and bringing that down. So they've got this kind of nasty dynamic where kind of maybe they trade off interest rates and give that to the doves, and they look at the balance sheet and give control of that to the hawks. And it's just not a good way to run policy, because what needs to be happening now, looking at this from a kind of a longer term perspective, 12-month perspective, is very much that the economy needs actually probably even support rather than the kind of a tightness that they're exerting.
But so Freya, apart from the U.S., where I feel like you suggest that this is going to be the strongest economy, what happens in China? Is China's also hobbled by some of the monetary policy that they've done? Is there anywhere else in the world where you see, apart from the U.S., strength?
So this is more of I can't say it's very high conviction for Japan, because there's been such a long history there of false starts. But if I'm looking to where there might be something changing in the fundamentals in the real economy, I think what I've seen in Japan is that the labor market has actually really shifted. So for developed markets in general, We are more positive for the kind of the post-COVID cycle, particularly for the US, maybe even for the UK. But also those kinds of forces impact on Japan. And really that's about the kind of the retreat of China and rebalancing of developed markets. So that's in favor of all developed markets. But for Japan, I think what people are perhaps underestimating is the extent to which women have already been incorporated into the economy. There's a great deal of scope there to raise the productivity of the labor force because these women are very underemployed. So if there's a kind of a higher pressure economy, which we think globally there will be, that productivity gain perhaps starts to come through. And at the other end of the demographic card, the boomers have retired. And that was actually, particularly given Japan's kind of quasi-feudal labor market, that was a very constraining factor against wage growth. You've got this big surplus at the top of the chain that has now retired. There's no longer the incentive to kick these guys out the door by cutting their wage growth in half, but they're cutting their wages, their salaries in half as soon as they turn 60. That whole dynamic is gradually passing through the Japanese labor market system. So I think when we come to the Shunto this year, we might, to the spring wage negotiations this year, we might actually see some numbers that are a little bit stronger. And that really starts to speak to some of the underlying kind of fundamental issues that have created this disinflationary scenario for Japan. So again, this is another story that perhaps there has been a rally a lot through last year for Japan. But I think kind of looking towards this year, perhaps investors will be underestimating the extent to which something fundamentally has changed in Japan.
We have a viewer question for you, Freya, and this person writing in saying, how do you reconcile the low double-digit sales expectations of equity analysts with below GDP growth in the U.S.? Again, I think it just goes to the idea, is there a real big market mismatch, and how do you deal with that?
Yeah, I think that there is. Sorry, I'm slightly losing my voice here, but I'll persevere. There is a mismatch between a lot of different data that we're looking at. There's a mismatch between the survey data and the macroeconomic data. There's a mismatch between kind of what we're seeing in the jobs numbers and then these kind of big revisions that we're seeing coming through as well. So this is an era where there's a big, I think, inflection point, a big kind of secular inflection point. So a lot of these kind of like charts that we're used to running between these types of things historically have worked, but when there's an inflection point, they need to kind of recalibrate their relationship, and that's I think what we're seeing in a lot of different data.
But does that mean? I mean, does a mismatch lead to ugly things in the shorter term before it stabilizes?
I think what we see in the shorter term leading indicators is a kind of a wobble in US growth. And I think the reason why we are still more positive on the growth outlook for the US and potentially even for markets for the year as a whole is that kind of bigger picture analysis that I was presenting for Europe is in the other direction for the US. So for the US, the turnover of money is very much below trend still, below where we would expect it to be had we not been through this kind of pandemic. And that to me just suggests that the size of the US stimulus being so large has yet to be absorbed into the US economy. So when I think about those kind of short-term data, the kind of the survey data, both on the labor market, on capex, on housing, looking more wobbly in the short term, to me that's a good thing for the year as a whole because it consolidates that kind of impression that the Fed will actually cut, that they're now talking about kind of pulling back from QT as well, that actually in the first part of the year some of the plumbing is more kind of positive for liquidity creation anyway, looking at the kind of the technicalities around the balance sheet. And so that all kind of suggests that there's this underlying resilience in the US economy, right, which perhaps people will kind of lose faith in because of that kind of shorter term data, if that comes through in the hard data in kind of Q1 and in Q4 kind of retrospectively. But underlying, there is still a great deal of space or some space at least for money to turn over more rapidly in the US economy, and that kind of counteracts any kind of tightening of the authorities pulling money out of the economy or through weak credit creation and these things, which would normally have much more of an effect. Going back to that kind of viewer's question, these normal effects between kind of tightening and how quickly that feeds through have all been muted. Because we've been so far from kind of what I would call monetary equilibrium, what I would call kind of a stable turnover of money in the economy. And for Europe, we're very much, I think, back to the stage of kind of people have the amount of money they need to operate goods and service purchases. But in the US, there's still a surplus there. And that gives us this backdrop of resilience in the US.
Freya, thank you so much. And certainly we've seen that resilience over the last 6 months, almost, at each data point. Freya Beamish, Chief Economist at TS Lombard. Now, let's also look at Boeing, actually, pre-market. A couple of things you need to know. First of all, the probe is focused on the door plug, as some other carriers, including Alaska Air, United, have both found some loose bolts in some of the preliminary checks, and the U.S. Air Safety Investigator says it is not ruling out a wider MAX 9 probe. For the moment, Boeing pre-market down 0.4%. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. We will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Welcome back. Now, Boeing has issued new guidance to airlines on what inspections are required to prevent another mid-air fuselage blowout like the one on Alaska Airlines late last week. Now, this comes as United Airlines said that they found loose bolts and other parts on the Boeing 737 MAX 9 plug doors during inspections. Well, Bloomberg's Charlotte Ryan now joins us with the very latest. Charlotte, I mean, it's just pretty incredible. Like I have to say, every hour we read more stuff about it. What's the latest that we found out about the loose bolts and panels found on the 737 MAX 9?
So the latest, as you say, is that United and also Alaska have begun inspecting other planes, and they have found further loose bolts. This won't be what Boeing was hoping for. The kind of ideal scenario with Boeing would be that this was a one-off, an unfortunate incident. We were extremely lucky no one was hurt. But what they would have hoped for is that the rest of the fleet would be inspected, everything's fine, and you can kind of look at what you can do differently to prevent this happening. But the fact that we've already seen this in other planes in the fleet does beg the question of what is going to happen next. The actual inspections that these airlines have to carry out don't take very long. It's about 4 to 8 hours per plane. And again, in that best case scenario, that could only take a few days. But what the question now is what the regulator is going to do as a result of this. Will we see a broader grounding?
But so what happened? I mean, so this is not a problem of manufacturing. This is literally like a loose bolt. And then do you need to ground the plane, or can you just kind of screw it tighter? I know this is not an IKEA shelf, but it's like, how much of a problem is this?
Yeah, so it's worth saying we don't know definitively yet what caused this. The investigation is still ongoing. We obviously are seeing a lot of reports of these loose bolts, and indeed Boeing had sent a memo out to operators in December talking about loose bolts in a different part of the aircraft. So it does look like that is the cause. The aircraft do have to be grounded to inspect them, to effectively tighten up those bolts, but it is starting to look like it's a problem, as you say, not with the manufacturing, but with the assembly of these aircraft.
Okay, I know you and your team will stay on top of that, so we'll have to, you'll have to come on to bring us any new developments on this incredible story. That Boeing probe, of course, focusing on the door plug, as more carriers have found some loose bolts. Bloomberg's Charlotte Ryan there with the very latest. Coming up, a warning to Houthi fighters in the Red Sea as Chinese shipping giant Costco cancels deliveries to Israel over security concerns. We'll bring you the story next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Now, the U.S. Secretary of State has said Houthi militants in Yemen must know that they will face consequences if they attack ships in the Red Sea. Antony Blinken was speaking in Saudi Arabia after talks with the Saudi Crown Prince.
We've had 40 countries come together to make clear that what the Houthis are doing has to stop. And we have other countries that have made clear that if it continues, there have to be consequences. So our strong view, our strong preference is that the Houthis get the message that they're receiving from countries around the world that this needs to stop, and that's what we're focused on.
With me now is Ross Matheson, Bloomberg's EMEA news director. Ross, we've seen the Secretary of State actually going on these short but intense trips. Is he actually hoping to achieve anything?
Well, it actually is open to debate what he may achieve from this trip. But at the very least, he's been visiting a bunch of countries in the region, Turkey, Saudi, Qatar, the UAE, and more, and really collecting a sense of the mood from these countries and their concerns. And it's interesting, his final stop really on this trip seems to be Israel itself. Well, he has a bunch of meetings today with senior officials. What messages is he passing on to the Israelis from the region, and what message is he bringing from the US? At least publicly, the US has been a very strong supporter of Israel for its war in Gaza, a long-running ally militarily, strategically, economically. Behind the scenes, the messaging is probably getting a little bit more tense between the US and Israel, which is this war has gone on now for a while. Where is it going? Is the trajectory of the war changing? And what is the game plan for after the war is over? There's still Israeli hostages inside Gaza. That doesn't seem to be resolved, no progress there. And then what happens when the fighting does stop? A region that it remains very, very unstable, very, very fragile as well. Like, what happens after that? That's the big question.
Yeah, and civilians killed in Gaza, the numbers are absolutely astounding. When you look at what he also warned a couple of weeks ago, is there a danger that this escalates?
Well, there has been a warning for many weeks now, this concern that this will bring in other actors in the region because Iran has many proxies, not just Hamas in Gaza, but Hezbollah in Lebanon, the Houthis in Yemen. We can see, of course, the Houthis have been taking pot shots with rockets and drones at shipping in the Red Sea, and that's been causing mass diversion of ships for many weeks now, and that's sort of painful and difficult for the shipping industry. But does it escalate into a full-blown regional conflict? That's always possible. Also, in a way, just because there are so many military assets in the region together, the chance of something accidental happening is pretty high. But even these Iranian proxies, Hezbollah, which is much better armed than Hamas, they know the risks if it triggers into a broad conflict. So they seem to be wanting to maximize the moment for themselves, but getting to the line where it doesn't tip into a broad conflict. No one really has an interest, it seems, in that happening.
Ross, there's also much more, public outcry from governments about what is being done to the civilian population. South Africa lodged a complaint, I think legally. Does that change tactically what Israel does on the ground?
Well, Israel seems to be doing what Israel really wants to do on the ground. They've made that very clear. Their messaging has not really changed since the war broke out, which is we will want to make sure that Hamas can never do again to us what happened on October 7. We want to take out the Hamas leadership, want to weaken it to the point it can never surface again, which is obviously easier said than done. But we can see they're moving towards this sort of surgical strikes, tactical attacks on the leadership and drawing criticism as a result.
Ross, thank you so much. As always, Ross Matheson, they're Bloomberg EMEA news director. Coming up, GSK announces plans to acquire an asthma specialist in a deal worth up to $1.4 billion. We'll be discussing M&A next. This is Bloomberg.
Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things we have this great connection about the love for baseball, and the reason why Warren and I got to know each other is he insured my contract, the 252, I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
What does it take to be a great surgeon?
This may sound trite. Perseverance, resilience, in practical terms, being able to take a blow and not having it become a permanent deformity, and grit.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Boeing 737 MAX 9 fallout continues as United and Alaska Airlines find loose bolts on some planes, dealing another blow to the troubled plane maker. German industry shrinks for a 6th month as a recession looms in Europe's biggest economy. Plus, the French Prime Minister Elisabeth Borne steps down as Emmanuel Macron seeks fresh momentum for his agenda ahead of the European elections in June. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So GSK has announced a deal to acquire the asthma specialist Aiolos Bio for up to $1.4 billion. Now, it comes after the chief executive, Emma Walmsley, said she was on the hunt for acquisitions in the drug maker's core business. It is a promising start for M&A this year after a disappointing 2023. Or is it? What else can we expect? We're now joined by Dwayne Lysite. He is co-head of EMEA M&A, that's a mouthful, for January 9th for JP Morgan. Dwayne, thank you so much for joining us. This is like a good reset when you look at, the pipeline for the next 12 months. Is it looking good or is it harder because of the credit conditions?
Well, President, thank you very much for having me on. Happy New Year to you. It is a good start. And actually, when you look at healthcare alone, we've had over 8 billion of deals announced in the last 24 hours. So our hope is that this is a good start for a better year. I think last year undoubtedly was tough throughout the world, particularly in EMEA when you look at absolute volumes. But I think it's a different year, we think. I think hopefully we have a little more tailwind and less headwind. There are the geopolitical macroeconomic issues, but helpfully inflation seems to be under control, and interest rates, if anything, it's sighting downwards. And if you look at Fed rates, the market is suggesting 75 basis points by the end of the year. That all helps the key component of M&A, the psychological side of confidence. And I think people are generally pent up to get deals done.
But Dwayne, what happens as we reflect on 2023, because I think it's quite important to reflect and then look forward. Why were there not that many deals? Because you can not buy a company because you feel nervous about the future, you can not buy because you don't have the money, or you can say, actually, I'll buy it for this price, but the seller just wants so much more.
Yeah, and I think that valuation mismatch is gradually coming together. I'm not saying it's there, because I think there is still a mismatch between buyer and seller. And sellers, frankly, have long memories and buyers have short memories. But that is going to tighten this year, and I think it's going to be helped by banks who I think are in a better position to actually finance deals, hopefully at lower costs. And the overall kind of consumer outlook hopefully will get better if we can avoid that recession potentially in the US and have a softer landing. All of these things do help the confidence level. But every now and then you get a cycle in M&A. Right. And I'm hoping that 2023 is that trough. And that actually we push forward from here. We had to go back in EMEA, back 20 odd years to get a year that was lower in volume terms. That puts it in context. But if I take one star from last year, it was the December run. The Q4 was 33% of M&A in EMEA last year, and hopefully this is a bit of a springboard into 2024 and beyond.
I mean, is that also because markets are expecting actually interest rate cuts? Again, how much do they think about geopolitics, and how much is it actually the financing longer term?
I think geopolitics are a very important part of it. Now, we had clearly the Middle Eastern crisis in October, and that definitely dampened things. But I think people started to look beyond that to the wider macroeconomic situation. And we had that significant run in equity markets, particularly in the US, from October through to December. S&P returned 24% last year. So I think, again, that adds to the confidence. Maybe people are getting back, investing the money, hopeful that they can actually get the return they're anticipating.
And Dwayne, where are you most optimistic in terms of sectors and in terms of region? Is this cross-border or is it actually inter-domestic buyout?
We think cross-border will be healthy. I think in EMEA is probably more local proportionally, and UK was a difficult year. If I take one particular market, it was down over 40% in announced volume. So our hope is that we see that coming back next year, and I think it'll be led by the bigger markets. It will be the France, Germany, Nordics as probably the key countries, and then when you look at sectors, we had a very strong healthcare last year. It was up 60-odd% in EMEA, but I think it'll be led by the stalwarts of diversified industrials and then energy, power, etc.
But healthcare, is it also because it was already ripe basically for acquisitions because we hadn't seen that many in the last 10 years?
I think in portion, but that I think in many ways is the point. You get this kind of pent-up demand, and then it goes. Right. And I think we're going to see that sector by sector, country by country. We are cautiously optimistic at the end of the day, and our hope is that the momentum that has been created at the back end of last year will continue. A lot of it is down to confidence, but we see that returning.
Dwayne, what do price mismatches look like in the UK? Again, are sellers trying to adjust to what a buyer will pay for it because they look at the next 12 months and they say, look, it's going to be okay, but it's not going to be great. Better sell now.
Yeah, I think to a point. I think they are assets that are selling are generally good quality assets that people actually want almost no matter what. And I think what we'll see now is that actually the slightly more marginal assets will come through, because people say, actually this is my time, my opportunity. And when you look at the market itself, it was the bigger deals that didn't happen. But actually when you look at the sub $5 billion, it was only down 10%. And actually, interestingly, the $1 to $5 billion market in EMEA last year was flat on 2022. So I think there is hope when you look at it. Bigger deals, we suspect, will start to come back. Why? Financing markets are better, and people are saying, now is the time to get on with things. I have a strategy. I need to deploy it.
Dwayne, I'm going to throw you a curveball that only JP Morgan bankers can deal with. Are elections actually an accelerator for M&A? So we have the UK election, we have the US election, we have European parliaments. Do people think, actually, I don't really know what comes next, better sell now? Or is it, again, like priority number 6, 7, or do they just not really think about it?
I think they do think about it. And when you look at it statistically, actually election years are often quite good years. Presidential election years in the US are actually good years for M&A, generally speaking. But to your point, Francine, we have the largest number of people going to the polls since 1800. Yeah. I think it's 49% of the world's population,
it's incredible.
Which is a huge number. So will that interfere? I suspect it will. It creates a kind of attention as to what will happen. But actually, we find that incumbent governments or potentially new governments tend to work with the business community 12, 18 months beforehand to say to them, if we're in power, actually this is what it's going to look like. And I think a lot of that is being done around the world. So I take hope in that it's more of a glide path rather than a sudden impact by any election.
Is there a period in the year where M&A is usually more active? So I know, again, it's not like a house sale, but there do tend to be more house sales in the summer.
Exactly. The summer tends to quieten down. And you're usually I tend to look at what does the start look like? Is it a fast start, which often helps, if anything, back to the confidence point. And then the last quarter, in terms of people trying to get the deals done, set themselves up well for the next year. And actually, when I look at our own pipeline, that is very much what we saw. We saw a lot of clients coming to us and saying, I want to get ready, I want to get started. And that is where I'm kind of hopeful. But I say cautiously optimistic rather than outright. It'll be fantastic.
Dwayne, thank you so much for joining us.
Thank you
Dwayne
very much.
Lysaght there from JP Morgan on M&A this year. Now, let's also look at one of the most read stories on the Bloomberg terminal right now. Shares and bonds of Spanish blood plasma firm Grifols tumbling after the short seller Gotham City Research published a report criticizing the company's financial reporting. Now, Grifols issued a statement just moments ago saying it categorically denies and actually rejects any allegation of wrongful accounting or reporting practices. Still, on the back of that, Grifols pre-market is dropping some 43%. That's a pre-market trading for Grifols. Now, coming up is crypto on the cusp of its first institutional bull run. We take a closer look ahead of a key SEC decision on the first U.S. Bitcoin ETF. That's next, and this is Bloomberg.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back. Now, we just want to show you what Grifols has been doing. We showed you the ADR, and this is pre-market ADR of Grifols. Let's also show you what's happening, actually, Grifols in Spain. Now, shares and bonds of the Spanish blood plasma firm Grifols are really down 38%. This is after a short seller, Gotham City Research, published a report criticizing the company's financial reporting. They have, just a short while ago, completely denied any of these allegations. So we'll bring you everything that we know about Grifols. Again, they have said it's just not true. Despite that, actually, Grifols down some 37.6% in Spanish trading. Now on to Bitcoin, and it's steadied after briefly rallying past $47,000. That's been driven by optimism that regulators are set to approve the first U.S. exchange-traded fund investing directly in the world's largest digital asset. Well, the executive chairman of Phoenix Digital Assets, Jonathan Bixby, joins us now. Jonathan, great to have you on the program. I mean, this is exciting and terrifying at the same time, because since last time we spoke, I mean, everything and anything's happened to Bitcoin and some of the exchanges. I mean, do you expect the SEC to approve this ETF, and how big a deal would it be?
Yeah, so I do. I mean, I think that the SEC has been put into a bit of a corner through some of the legal, the lawsuits that have happened. I think that there are really smart financial operators like BlackRock that have come out publicly endorsing a product. I don't think that happens. BlackRock's pretty smart, and Larry Fink's not going to go out and endorse something unless it's going to get through. And I think fundamentally the SEC can't say no at this point. So I expect it in the next 48 hours.
Okay, and so if it's approved, what happens to Bitcoin, shorter term and longer term? Is it a real boost?
I think it is. I mean, I think you have to understand it almost like a trade deal between crypto world and fiat land. So for natives like me, I live in a different world. I live in a digital world. That world is a world of growth, productivity, very little debt because it was essentially wiped out in the last bear run. And in the fiat world, we live in a world of low productivity, aging population, and a ton of debt. And what this really is a trade deal so that people in fiat land can get money into crypto land in a safe, regulated way. And I think this is about 15 years in the coming.
But so where are we on crypto land? Like, we recently interviewed the new Binance chief executive.
Yeah.
And I have to say, we were expecting more in terms of news on how to change the exchange and I guess, make it regulatory, or being able to put it in a place where it would have regulation approval. And we didn't get many answers on that. So there's so many question marks about what happens next.
Yeah, I think crypto land is an emerging economy. It's no different than any other emerging economy. And so in emerging economies, you have risk and you have high reward. And because of that risk, people have been scared to, for example, custody their coins with a group like Binance or FTX, because what happens if they go out of business? It's also really difficult to custody your coins yourself. You have to be a technologist, and you don't want to lose them in a dumpster somewhere and wind up losing hundreds of Bitcoins, right? So I think that what the ETFs really do is they take a lot of that complexity away and allows you, someone in the mid-US who wants to put 1 or 2% of your portfolio into this new economy, you can do that in a safe, regulated way. And I think that's an earthquake of demand coming to the crypto market very soon.
I have a viewer question. Actually, I have many viewer questions for you, Jonathan.
Good.
So thank you so much for viewers that are writing in. Why is the ETF approval much different than MicroStrategy, MSTR already being a proxy for Bitcoin?
Yeah, MicroStrategies would be a proxy for Bitcoin through what Michael Saylor has done in terms of bringing that onto the balance sheet. I think what brokers are looking for is a little bit more certainty. And the ETF market, as you know, is a very low-fee way of getting large amounts of capital in a simple way into an asset class, gold being the best example of that. And so I think what brokers are looking for is A, a way to make money, and B, a way to scale this industry in a way that's been done before. So yes, you could buy Coinbase as a proxy, you could buy crypto miners as a proxy, you could buy MicroStrategies as a proxy. That's not really how these markets have developed over time, and I think BlackRock and Fidelity know that.
So there's BlackRock, there's Fidelity. Will others actually take this more seriously if it does get approved?
I think the answer is fundamentally yes. You have some of the largest institutional capital moving into this market. I think that having Fidelity and BlackRock at the front of that, including Invesco and some other smaller ones like ARK, makes this a very legitimate asset class, both for retail customers and I think institutional flows. So I think institutional flows like pension funds are now going to start moving money into this asset class in a way that just hasn't happened in the last 15 years.
Jonathan, I also want to ask you about, NFT. So you launched NFT investments, and they've slumped quite hard over the past year. Again, is this a fad? Does it come back? Like, we don't really talk about NFTs anymore.
Yeah, I think that what happened in the last run, and we've had many of these, right? So anyone who's been in crypto has seen the bull and seen the bear. The volatility is huge. I think what we've seen through all of those volatile moments is growth. So the number of wallets, as an example, last year the market went down 80%. Everyone got wiped out, a ton of bankruptcies and criminal proceedings. And guess what? Population grew 2x. So there's 2 times more wallets in the industry today than there was a year ago. And that's because venture capital, who was seeding the market, put $67 billion to work in 2020, 2021. That is now coming out into this cycle. So whether it's NFTs, whether it's ticketing, whether it's rapid trading, which is happening on the Solana network, all of these use cases are coming. It's early days. I mean, this industry has only been around for 15 years. And so I think that as you see the next 10 or 15 years, this emerging crypto land, this digital economy, is, I think, a place where people want to have some upside, and that's where the ETFs come in.
So where do you see opportunities now? Like, how's your funds, how are they changing?
Yeah, so I think there's 2 sides of this. There's the supply and the demand side, right? So the demand side, we've never seen a demand earthquake like the ETF that's happening. You have to remember that there's also a supply earthquake that happens in BTC every 4 years. And what happens is every 4 years there's something called the halving, which is going to happen in April of this year. It's going to get it twice as hard to mine BTC. So it's inherently a deflationary event in crypto. So I think what you're going to see, if you answer the question explicitly, is you're going to see a lot of money moving into BTC, which is the large cap, and a lot of money moving from that large cap down into small caps. And those small caps are altcoins like Ethereum and Solana. And you're going to have more infrastructure being built on these pieces over time. So digital crypto land is a growth area. I don't feel as good about non-crypto land at this point.
But Jonathan, so what do you need actually for I guess, the big, better-known players to come into crypto land to make sure that it's clean money, which is, frankly, then the biggest concern, like full stop?
Yeah, so I think you need, in 48 hours, the SEC to put a stamp of approval, even though Gary Gensler doesn't want to. You have that stamp of approval, which says, hey, this is now a regulated space for you to store some capital, which, again, is inflows into the system. I can't underscore enough how important that is for the industry.
But to do that, they need to be sure that it's clean. Otherwise, the SEC will pay the consequences in a couple of years.
That is correct. And I think that the SEC has gone over and above to determine that the entrants into the ETF market are clean.
Okay. Jonathan, thank you so much for joining us today. Executive Chairman of Phoenix Digital Assets, Jonathan Bixby. Now, coming up, the top 50 companies to watch in 2024, from artificial intelligence to autos. We'll have the full breakdown next, and this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Tiger Woods and Nike have ended their partnership of more than 27 years. The company struck its first deal with Woods in 1996, the year he turned professional. But unlike subsequent deals with NBA stars LeBron James and Kevin Durant, Nike did not sign him for life. It's estimated that Woods earned about $660 million from that relationship. Now, the 48-year-old posted on X that there will certainly be another chapter. Now, on to other news, and Bloomberg Intelligence has identified 50 companies from finance to food that warrant a closer look in 2024. Their analysis combines contrarian views on upcoming catalysts for change, such as new leadership, asset sales and acquisitions, as well as plans for new products and services. Now, this is one of my favorite segments in January. For more on this, we're joined by Tim Craighead from Bloomberg Intelligence. So, Tim, this is like Omen's work. I mean, it takes a long time to put it together. Give us a little bit of a brief background on why you do this and how you select the companies.
Yeah, absolutely. It is no doubt one of the favorite things we do every January. We've done all the work on the outlooks across markets and industries, and this brings it down to a group of 50 companies that we think are notable. They're part of our broader list of focus ideas with three things in mind: a really strong fundamental view that we think, number two, is different from the market, and number three, they're catalyst ahead, in particular in this case in 2024, to make the stories come around to what we think, assuming we're right.
Okay, so if you look at some of the names, AI, left, right, and center. Yes. Tell us more.
So AI is the most pervasive underlying driver. We think 2024 is going to be really interesting, combining sort of the movement of experimentation actually into implementation at the same time that there's a backdrop of an IT spending cycle that comes back into favor in the second half of the year. So you've got big companies that provide the infrastructure like an Alphabet or an Amazon with AWS underneath of it. But you've got an SAP that provides the data with their enterprise planning systems. You've also got some application companies like Intuit, which was a tax prep software program in the U.S. that's implementing AI to make it easier, or Match, if you want to get fun. Think Tinder, think Hinge. There's elements of better photo selection with AI. So AI is quite pervasive, and we think it accelerates.
And then, of course, the other, I guess, big thing is this pivot that we may or may not see, but certainly the markets thinks that we're seeing from central banks.
Yes.
How does that play into company selection?
So interesting. This was a big topic last year, but it was with a wind at the back, thinking that we're going to see margin expansion for financials. This year, as we look towards a pivot towards easing and lower interest rates, it's a headwind for margins, and we're generally concerned about European banks. Barclays is on the list with that in mind. AXA is an insurance company, a similar sort of thesis, plus some regulatory change that makes it even more sensitive. But there are positives. UK home builders have been under a lot of pressure. Persimmon, we think, could actually be better than expected in terms of where its business goes.
And then you have a bunch of companies that are basically looking at restructuring or have new chief executives.
Indeed. Think Vivendi from a restructuring perspective. We thought last year largely it was going to be this big mega entertainment company, but now they look to be splitting the company up. SABIC in the Middle East is going to be selling off its steel business and focusing it on petrochemicals. Management change, think Union Pacific with a new CEO, or here in the UK, British Telecom. You know, a perennial disappointer that we think with a new CEO actually could turn into positive, not negative surprises.
Tim, thank you so much. And where do I find it? On the website?
On the website,
on the Bloomberg
and
terminal.
we will find it on the Bloomberg terminal as well.
Or you can email Tim and he'll just send it to you. Tim Craighead there from Bloomberg Intelligence. Up next, Bloomberg Brief, Daniel Manis from London and New York. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning from our world headquarters in New York. I'm Menace Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
The former bond king Bill Gross signals he's now steering clear of treasuries, calling the 10-year at 4% overvalued. Boeing faces another blow as it moves towards returning grounded jets to service. United and Alaska Airlines both finding loose bolts on some of the planes. And Samsung's profit drops for a sixth straight quarter. NVIDIA shares hit a record on new AI chips for your PC. Consensus is building. It's time to slash, burn, and go. That is the narrative. Were you drawn in by the 1.5% rally yesterday? Oh, foolish you, maybe. The S&P 500 down 0.25%. Kalanovic, we're moving to risk off. Disinflation process, that stalls. The November-December rally, that will be unpicked. Max Kettner is in the house, HSBC. Reverse Goldilocks is coming. That porridge is going to go cold mighty quick. But he's ahead of the curve. He's already taken risk off. What is reverse Goldilocks? How much more do you want to lighten up on this? If you're not long NVIDIA, by the way, everything else in the world you want to review, but maybe not NVIDIA. Makes another record, over $500. It's got an AI chip now that can help even people like me. But that consensus is building. Mike Wilson warns equities are stalling. Avoid the indices. Stock 600 is down by 1/8%. Tech is under pressure. You've got the Samsung profits coming in disappointing. You've got a couple of stocks in the US as well. Microchip USA revenue falling 22%. So that gives you the Stock 600 technology grouping under pressure. Infineon, ST Micro. So that halcyon days of all the other chip makers may well be coming to an end. And if you got it right last year and you sold your chalet in Gstaad and you bought your snow lodge in Japan, hurrah for you, because the equity markets are up 25%. Japan is trading at levels that we haven't seen since 1990. And don't forget, Warren Buffett was hellishly bullish on Japan last year. And the currency doesn't look as if it's going anywhere further north. Danny Berger knows a thing or two about Japan. Good morning.
Manis, I feel like you just want to get skiing. Go skiing. I feel like that's the underlying hint of what I learned just there from your market check. Well, look, it's not just equities that are reversing yesterday's moves. It's a cross-asset story. What we did yesterday, we're basically doing the inverse today. Your 10-year yields are coming up higher. We're looking at a 1 basis point gain there. So U.S. Treasuries sell off after a rally yesterday with New York Fed inflation expectations coming in, dropping to the lowest since 2021. But then we had Fed speak from Bowman and Bostic. Both have the same message. It is not yet time for cuts. Bostic said it would happen in Q3. Bowman just basically saying, nope, we're not there yet. So that adds to the bearishness for bonds. Meanwhile, you are looking at Bitcoin, again, reversing yesterday's move. We went up to 47,000. Now we're below it. We're at 46,500, down 1/3%, nearing that deadline tomorrow for the SEC to approve an ETF. Finally, NYMEX crude, again, a reversal of yesterday. At one point, dropping some 4%. Today, up nearly 2%. Again, the drop yesterday was based on the Saudis reducing their price for Asia. But Manis, in part, that reduction in energy costs got us more excited about inflation. Inflation coming in. But has that bond market rally on that premise gone too far? Well, I'll tell you, Manis, the bond king is out of bonds. Bill Gross writing on X that the U.S. Treasury 10-year yield at 4% is overvalued, while 10-year tip at 1.8% is the better choice if you need to buy bonds. I don't. There you go. The bond king saying not buying bonds.
Yeah, I just want to know where you're squirreling your money away to, but we'll come back to that. We'll come back to that in a while. Oh, look, he was quite prescient, wasn't he, last summer? He called time, the bond bulls. He said, look, you misguided, and then yields went on to spike higher. What he does focus on, though, is, in his second tweet, is about the re-steepening of the curve, a return to a positive 10-2 yield curve. That's where you want to go. Of course, BlackRock are warning that you could have a busted auction, and we've heard this time and time and time again. It's a bit like that ETF for Bitcoin, time and time and
at least
again.
Tomorrow is finally the deadline.
Oh, do you know
right?
what? I just want it to happen. I just want it to happen so I can emotionally move on and not have to read any more about it.
Get out of here, Manus. You love checking Bitcoin's price. I know for a fact you love it. Stop that. I know.
I'm secretly a Bitcoin miner. There you go.
I love that. I love that. Manus is like using up all the energy in New York. Anyway, Manus, so you mentioned Bill Gross got last year right. I want to talk about someone else who got last year right. It is HSBC's Max Kettner, who is spot on with his bullish call. This year, though, 2024, he's sounding the alarm, writing the biggest risk continues to be another repricing higher in rate expectations once again. This, in turn, should result in another reverse Goldilocks episode where virtually all asset classes suffer. I'm pleased to say Max joins us now. Max, it's only the second week you've gone full-on technical bear, which, yeah, spice things up. Why not? So what does that look like? What is reverse Goldilocks?
Yeah, look, and thanks for having me. Look, I guess for us, it's really an environment now where it's not the classic risk-off where you want to have sovereigns, right, where you want to have the yen and gold and all that, where suddenly growth concerns come in. That's not the case at all, right? That's not the case at all. In fact, actually, when we look at the fundamentals, when we look at growth, right, particularly in the US, things are still very, very okay, very solid, right? Still ticking up. And, you know, with that easing of financial conditions that we've seen in Q4, that actually should be feeding through also into better growth. Earnings expectations now for the upcoming Q4 reporting season, particularly in the US, are very, very low. Consensus is saying an 8% drop quarter over quarter, right? So very low. So we do get the questions from clients quite a lot where it's like, well, if you're telling us that fundamentals are so good, what the heck are you doing, right? Well, the problem is that what's changed over the last 2 months is two things, right? The repricing in rates, right? We see now, what, a 2/3 chance priced in for a rate cut in March. And that sort of bites, right? That bites with the solid fundamentals. I can't have, on the one hand, really solid fundamentals, a bit of signs that even U.S. inflation figures might be a bit stickier than thought, right? And at the same time, a rate cut in March and in May and in June and so on and so on. Yeah. Does that sort of bites, right? One of them has to be wrong. And for us, it's not the growth side of things that is wrong. For us, it's the rate side that has gone a little bit too far, too fast, a little bit exuberant. And as that gets at least partially unwound, partially priced out, that leads to that reverse Goldilocks, right? That leads to what we call reverse Goldilocks, or you can call it good news becoming bad news, or whatever you may want to call it, right? And that really then leads to pain across the asset classes.
So, Max, good morning to you. There's a lot to unpack there, and my key takeaway, and by the way, Happy New Year. You sound like a reluctant cutter of risk. It's almost a reluctance to do it. But the precedent that you're setting is that yields will back up. That is underpinning the majority of your move. How far will we retrace above this 4% level? I've got BlackRock who want to snap up duration at this level, but what's the basis for the backup in yield? Where will we back up to that will undermine the rest of the thesis, undermine the rest of the assets, excuse me?
Yeah, look, I mean, we've got only a rate cuts in the Fed starting by the Fed starting in June, right? So at least rate cuts for the first half up until June, they'll have to be taken out, right? Then they'll have to be postponed a little bit. I think when we look at also things like CPI swaps, so what's priced in near-term inflation expectations, that is very clearly below where we are seeing it. And in some parts, when you look at one-year inflation swaps in the US, they're below 2%, right? And just 2-3 months ago, we were at 2.5% there. So at least to those kind of levels in inflation expectations near term, we kind of have to go, right? We really have to go. So until we then can add again to duration and into other asset classes, into high yield, into equities, it's going to take a little bit of time. And I think particularly on the near-term inflation expectation side, what we've seen priced out compared to 2-3 months ago, right? It's been a little bit too much. Again, we're priced on some of those parts already below 2%. And to your point, it is one of the cornerstones of why we went bearish on risk assets. But the other one is also, and that's very important, is sentiment and positioning. According to our measures, when we look at our aggregate sentiment indicators, they're now at the 95th percentile as of last week, right? So they've clearly sent a very, very strong sales signal. And that doesn't happen every other month, right? It's only happened once last year, and before that at the beginning of 2021. So we have a very strong signal from sentiment and positioning that things went a little bit too far and fast, not only on the rate side, but also on the risk asset side of things in the last 2 months of last year.
Max, can you give me some good news? What can I buy?
I think what you can buy is, usually I'm the one for good news.
I know, I was going to say, this is a different Max.
Me, right?
What happened during New Year, Max? Jeez.
So, let's start with the bad news. The bad news is usually that kind of reverse Goldilocks environment is basically you can't buy anything, right? Which is crazy. But also, think about the last 2 months last year. If you'd been really bearish, and imagine you'd been long gold, long yen, long rates, you would have been equally as right almost as if you'd been massively risk on and you'd owned high yielded equities, right? And that kind of doesn't make sense. So of course, if you get the reverse, there is very few places to hide out. One of the places is the dollar, right? Is the dollar, and we think it's most likely going to be expressed and best expressed against sterling, against the Swedish krona. The Russell has rallied too much, right? That's not great. But where you can hide out is things like short-dated IG. It's energy, right? Because fundamentals are still so good, right? And oil, really, when we look at oil positioning from non-commercials, also from fund managers, it's close to record lows. When we look at jet fuel demand projections, they're still going up, right? So things are not that bad, actually, on the oil side. And on top of that, when we look at equities, the least Goldilocks market is Japan. Right? So if really the yen doesn't sort of sideways or perhaps depreciates a bit further, then Japanese earnings should benefit from that, and that actually gives a tailwind to Japanese equities.
Max, there you go. I told you that was the trade of the day. Japan's at a 30-year high. It's reminiscent of the 1990s. Neither of you are
Max is getting that ski chalet in Niseko, I think.
On the sales floor, there's going to be a picture of you up there, and they're going to be throwing darts at it because you are the antichrist of writing tickets. That is essentially what you are this morning. You are a salesman. You're a nightmare in terms of, pro risk, let's write tickets, let's make money. Max Kettner killed the golden goose for 2020.
Ouch, Max, you're going to just let that hang there.
He's been very kind.
I think he is, Manus.
He's been around for a few years. Okay, Max, well, we take it on board. Anti-Goldilocks has arrived. Reverse Goldilocks has arrived. Let's get some of the other stories that are trending on the terminal this morning. This is what we've got for you. Lawmakers are demanding answers from the Pentagon and the Defense Secretary, Lloyd Austin. He failed to notify the White House about his hospitalization. The Defense Department has still not disclosed why Austin was admitted to the Walter Reed National Military Medical Center, or whether he was unconscious at the time during his multi-day stay in intensive care, which began on New Year's Day.
Barclays says its global headcount dropped by about 6% over 2023. That's the most visible sign yet of the bank's cost-cutting push. Manus.
Shares and bonds of the Spanish blood plasma firm Grifols are plunging. That's after the short seller Gotham City Research published a report criticizing the company's financial reporting. In regulatory filings, Grifols rejected the allegations made at Gotham, saying the report contained false information and speculations.
Meanwhile, shares of Juniper are jumping on a report that HP Enterprise is in talks to buy the company for about $13 billion. HPE has been focused on expanding its more lucrative businesses, such as high-powered computing. Well, coming up, we're going to talk more about tech. Samsung's tumbling profit signals that the timing of a tech recovery is still uncertain. Manus.
That's the fallout from Boeing. It continues. Both United and Alaska Air find loose parts during the inspections of their MAX 9s. The details on Bloomberg.
much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The 2024 nominating contests are here, and the candidates are making their cases to voters in Iowa ahead of the caucuses. Bloomberg is live on the ground, bringing you the fastest news.
Trump is leading by a long shot.
Insightful interviews.
And at the end of the day, that's what the American people want.
And the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
It all starts Monday in Iowa, only on Bloomberg. Context changes everything.
It has been very brief. I'm Manus Cranny in New York. Danny Berger alongside me at London HQ. To Samsung, they've reported the sixth straight quarter of declines in profit. The result reflects weak consumer demand, stoking uncertainty over the timing of a broader tech recovery. Let's get to Aggie Cantrell. She's on this story for you. Aggie, good to see you this morning. I mean, I look at NVIDIA, I look at Samsung. Let's start with Samsung. Profit falls 35%. Does that tell me something about a broader weakness in tech?
Hi, Manus. Yes, I mean, this is really also a Samsung-specific story in some cases. Analysts are pointing to their weak foundry business as a potential reason for that such significant decline in operating income. However, there is also this broader effect that a lot of companies, including Apple, are feeling right now about lackluster sales in the smartphone sector. And that, of course, impacts a smartphone giant like Samsung. But of course, this is also something that we won't really understand fully until these were the preliminary results, and until they get the full results on the 31st, where they have a breakdown of the different parts of the business. Then we'll be able to get a clearer idea of what went wrong in this last quarter. But really, what investors are going to be looking towards in the next quarter, and the one after that, will really be about what Samsung's long-term strategy is to make the AI plays that a lot of other companies are doing as well.
A beautiful segue, almost if you knew that, like I was going here. Aggie, I'm actually kind of worried because Manus started the show talking about NVIDIA and AI and how he's going to start using AI all the time if this comes to fruition. So I'm a little bit worried what that means for the world. But tell us, what is this like AI PC thing that NVIDIA... He won't be replaced. He will take command of the AI. But what is this, Aggie? So it's what, PC with AIs, and NVIDIA has the lead here?
Yes, so essentially what NVIDIA has presented is an update of of some of their chips, essentially so that they're proposing this idea of the AI PC. This is something that we've also heard from the likes of Intel and AMD. Essentially, what we saw in NVIDIA's boom last year was about them providing chips that could retool data centers so that there was the capacity to train AI within those data centers. But the real push this year seems to be about being able to do on-device AI applications. And so NVIDIA's push to say we're not just offering AI tools for data centers, but we can also provide it for your PC, for you to have in your hands. That's really the next step that a lot of these chip makers are trying to push for, is to be able to provide on-device AI chips.
Okay, Aggie, thank you very much. I, for one, accept our coming AI overlord, says Bloomberg's Aggie can't trill. Hey, man, some breaking lines for you. We just had a UK 20-year bond auction. Record demand, pretty remarkable in a year where we're having this back and forth of will the BOE cut? They're expected to be the last to cut. And BlackRock is warning of UK bond vigilantes in this election year. But for the moment, a clear bid into the UK 20-year, this auction. At the moment, yields are pushing higher, though, across the gilts space, man.
And this plays back to where we are with Bill Gross and the whole narrative this morning. By the way, BlackRock are saying they're neutral on gilts and that the Bank of England rates are above normal. They're staying neutral on the gilts as they see Bank of England rates above normal. But of course, the risk is that the vigilantes do return in an election year. But could this be the last gasp? You know, do you pack away at the very, very long end? Do you buy duration? Not if you listen to Max Kettner. He doesn't really want to be long of anything at this juncture. Yields pop a little bit higher.
Max Kettner. Yeah, I was going to say Max Kettner starting us with a kind of depressing note. But hey, more coming up. We're going to talk sports. Maybe a little bit less depressing news for you on this Tuesday morning.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
It's Bloomberg Brief. Danny Berger in London, Manus Cranny in New York. Manus, it is the end of an era, specifically the end of a nearly 3-decade era. Tiger Woods and Nike have decided to parted ways. The contract is over. The partnership is over. This is a deal that gave Tiger Woods $660 million over those 27 years. He says people ask if there's another chapter. There certainly will be one. See you in LA, referring to a tournament that's going to begin Feb 15th that he hosts.
Yeah, I mean, that's the Genesis Invitational Tournament. So let's see who turns up to that. I mean, if you look back in 1996, this young sportsman got a 5-year deal, $40 million. And, you know, others have signed up for lifetime deals. Woods always went back in and renewed. He was signed up before LeBron James and before Kevin Durant. And they stood by Woods. I mean, he had some tough moments throughout his career. You know, not all press for Tiger Woods was wonderful press. The next question is, of course, who does his son sign up with? Charlie, I think in December time he was seen. I mean, I don't know this clothing. It must be a U.S. brand. Grayson Clothiers. So a lot of people were wondering when will the kid sign up, and is he capable of doing what his father did on the golf course?
Yeah. Yeah, I have no idea what that clothing line is, to be honest. But I also feel like brand deals look a lot different this year than they do back in the 1990s when Tiger Woods signed up. Right now, athletes want equity in companies. They don't want just a brand deal. They want something that outlasts them beyond their sports career, because with so many athletes, maybe not Tiger Woods, it's really short-lived. The other thing I will say, Manus, is I just picked up golf. So if Nike is looking for a new golfer to sponsor who can barely tee off, maybe that's endearing to common folk, I'm available.
Now I know what you'll be doing at about 10:30 in the morning when we're all finished. You're off in some golfing alley trying to learn how to perfect your swing.
It's true.
I used to play a lot of golf when I was very, very young. And that was a long...
Oh, Manus, we can go play together.
No.
We're probably like even level, because I literally just started. We'll go to Chelsea Piers together. We'll hit some golf balls into the Hudson.
So we already know which property zone she's going to be living in, everybody. We know what the rent we know what the rent marker is now for Danny Berger there. She's going to be in Chelsea. She's going to be on the pier. Anybody that wants to go play a bit of golf with Danny, send her an IB.
Maybe. Yeah.
Let's have a look at these markets.
He made us before we had to break.
Yes. Shall we have a look at the markets? Should we do what we're supposed to do? Yeah. Okay. Well, let's have a look, because I'll give it to you. There's your market. That's our favorite market, the Russell 2000. Oh, Danny, look at that. There's a bit of green on the screen for the Russell.
Price.
I think that's yesterday's. I don't think that's futures today. We'll take that down. We'll start again. We're going to catch up with Parag Garvey. He's in the house from ING. Is he ready to go long duration? Right here on Bloomberg.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you also have to, you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, you know, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really is not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. You need This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, a year in terms of what we have to replace.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to Bloomberg Brief. I'm Manus Crowley in New York.
And I'm Danny Berger in London. Here's what you need to know. Former bond king Bill Gross signals he is now steering clear of treasuries, calling the 10-year yield at 4% overvalued. Boeing faces yet another blow as it moves towards returning ground jets to service. United and Alaska Airlines both finding loose bolts on some planes. And Samsung's profit drops for a 6th straight quarter, while NVIDIA shares hit a fresh record on new AI chips for PC. Enthusiasm yesterday is turning into selling today. That holds true for both Bitcoin and treasuries. When it comes to treasuries, we have that call from Bill Grossman. Is going to talk about it in a second. We also had Max Kettner adding to that chorus that rates have just gone too far. We're giving some of it back today, but just barely higher by about a basis point. Bitcoin, we're waiting for tomorrow's deadline from the SEC. Will they approve the first physically backed Bitcoin ETF? That got us excited yesterday. We went above 47,000. We've given that back this morning. We're down by 1%. Finally, NYMEX crude, again, like these other markets, Manus, they are reversing yesterday's move. We fell some 4% off the back of Saudi cutting prices for Asia for their oil. We move higher yet again. We're up now 2% this morning, around $72 a barrel.
Well, maybe part of that is short covering, and certainly in these equity markets, if you were sucked in yesterday, it was 1.5% rally, giving a little bit back this morning. Max Kettner in the house joining the roll call of calls that says, curb your enthusiasm, you're overly exuberant, sentiment is stretched. They've had a real sell signal on their sentiment indicator. Stocks are down by 0.25%. Kalanovic is in there. Risk off is the shift. Disinflation will stall. Kettner is lightening up. Reverse Goldilocks is going to grip the markets. Now, that's true of everything except perhaps for NVIDIA, up over 5% yesterday. They've got the chip to end all chips. It's going to go in your PC. That's going to fuel your AI capacity. That's the democratization of AI for under $1,000. So NVIDIA, again, up over $500. That takes it through to a record high. Stock 600 are down by 1%. You're seeing chips under pressure, Infineon and the likes under pressure, along with ST Microelectronics. You've got a little bit of a downbeat report from Microchip in the US. Revenues down 22%. Revolves is down, the blood plasma maker. There's a dispute with them in Gotham, a huge short seller on a research note out there. And if there was one thing that HSBC and Max Kettner were prepared to say possibly was something that you want to put some risk on, it is in the Nikkei. It's obviously at the highest level since 1990, along with the topics. They both were the two best performing indices last year on a global basis, closing up 1.16%, Danny. But of course, it goes back to the bond market and whether yields will back up. That is the issue, isn't it, Danny?
It is, because when you listen to Max Kettner, he talks about fundamentals being strong, that fundamentally he is a bull. You phrase it very well, that he's a reluctant bear. It's just because yields have gone too far. You look everywhere else, Manus, there's a lot of equity bulls out there. Bank of America, Goldman Sachs, Deutsche Bank all think that the S&P is going to go to record highs. Lori Calvasina just yesterday raised her year-end target. Even Mike Wilson thinks that stocks can go higher. But the question will be, Manus, can they, if yields back up again?
Yep, and that certainly sets the precedent for Max Kettner, who is a reluctant seller of risk, but he is paring his risk. So with that in mind, Bill Gross is bailing on bonds. 4% is overvalued. He'd prefer the 1.8% tips if he had a choice. Well, let's take that proposition and put it to our guest now. It is Padraig Garvey, America's head of research at ING Financial Markets. Good morning. Good to see you.
Good to see you.
So Bill Gross, I mean, he called the market right last summer. Here he is. He reckons 4% is the wrong price on these bonds. We're going to back up further. You could say we went too far, too fast, too aggressively in NOV and DEC. Do you think we do back up in yield and just sort of reflect on this higher for longer narrative?
Right. I've got three things to say on this, Manus. The first one is we've been saying for quite some time that 4% is fair value. Now, how do I define fair value? What I do is I ask the question, where is the funds rate going to bottom looking forward? And the answer, as far as we're concerned, is around 3%. I want to see a 100 basis point curve. That's steeper than we've seen in recent cycles, but it needs to be steeper because of the size of the deficit. So 4% is fair value, point number one. Point number two, we currently have a minus 30 basis point term premium in the 10-year. So what does that mean? It means that the 10-year yield gives you the same as you would get from a rolling position on the front end of the curve. You're not getting compensation for being out the curve.
Right.
So in that sense, there's an element of richness attached to the 10-year. And because of that, I'm tactically bearish. Now, I'll come back to the fundamentals in a moment. But the third point is, if we look at 2024, what's the big story? The big story is rate cuts. What do bond markets get excited about? Rate cuts. So we're going to overshoot to the downside. So 4% fair value.
Yeah,
sorry, go ahead.
And Padraig, I mean, perhaps we have seen some of that, again, overshooting to the downside, but you did mention the size of the deficit. Apollo puts the issuance this year at $4 trillion. That would be a record if you don't count the pandemic weirdness that we had. Is there any point that this market is going to come back around to focusing on that issue instead of cuts, or will we just continue to be transfixed by cuts in 2024?
It's a great question because it really has not been an issue for the marketplace. You could argue that we've had some tailed 30-year auctions recently. The last couple of months have been a bit tough for 30-year auctions. But the marketplace hasn't priced in a bond market issue to reflect the size of the deficit. And what we know with a reasonable degree of certainty is if you look at 2024, the deficit is not going away. We don't have the political setup to solve the deficit this year. So we're staring down the barrel of heavy issuance over the course of this year. Has the market paid any attention to that? No. Will it? I think, yes, it will. But I'll go back to the point I made about the rate cutting cycle. Bond markets love rate cuts. So the early part of the rate cutting cycle will see yields fall. I'm pretty much convinced by that. Once the novelty wears off and we start to identify the end point, we'll start to worry about things like the deficit. So it is going to hurt us down the road.
So that sounds as if it's going to be a back end, two issues which come to the back end of the year. Do you accept that rate cuts might be delayed to the second half of the year? And then if you go into that back half of the year, we really convulse. We have an election and supply. So just take me through the chronology. First of all, how many cuts? And then the chronology of the back half of the year.
Right. So let me really confuse you here, Manus.
It won't be hard.
Tactically bearish. I think 10 stay above 4%. Middle of the year, bullish. Rate cuts, not in March, but summertime. 150 basis points this year. By the end of this year, the novelty is behind us.
Okay.
And yields start to back up again. So you've got this kind of...
So tactically, I'm to buy the market and then short the market.
Tactically, you're going to short the market.
Sorry, short the market and then buy.
You're going to buy the market with a viewpoint for this overshoot to the downside. I mean, I emphasize the point that this is an overshoot to the downside. 4% is fair value. So I think 10 gets down to 3.5.
Okay.
Could it get to 3? It could, but only if something broke in the US. If something doesn't break, we get down to 3.5. And I think that's 50 basis points over the forward Fed funds rate. It's going to make that term premium even more negative. So it really is an overshoot. Okay. And then we should back up again because of the deficit and the other issues in the long term.
Okay, so getting to 3.5%, it's much more of a tactical story than a fundamental one. And also, if we get rate cuts in the summertime, we heard from Vucic of the ECB yesterday saying that we're not talking about cutting interest rates now and probably won't before the summer. What about your timing, the differential between the ECB and the Fed? Who blinks first?
Oh, it looks like it's going to be a synchronous thing this time, which is really unusual because typically the Fed goes first and the ECB goes 6-9 months later. We're clearly getting different narratives from Chair Powell and Madame Lagarde with respect to the rate cut expectation in 2024, but that's just politicking into the logic that 2024 should see rate cuts. And from both the ECB and from the Fed, you know, let's not complicate things. Around the middle of the year, we expect them to be cutting rates. You know, March is too early, like I say. Q1 is too early. Q2 is good. By Q3, we'd be astonished if both central banks were not cutting rates.
Okay, so that's the trajectory and the timeline. So we just had this red headline, 20-year bond auction at home in the UK. Not home, but you know what I mean, back in the UK. Record investor demand. Would you buy 20-year gilts? I mean, the Bank of England will join the cacophony, the synchronized rate cutting, as you say. Would you want to be long duration that far out in the UK?
Depends on the time frame. Right. If we're talking about taking a punt between now and the middle of the year, because the BOE is in this game as well of rate cutting, despite all the denials, they'll be cutting too. So on a 6-month view, I'd buy it. Yeah. Would I hold it to maturity? Different story. If I'm taking a mark to market at the end of this year, it may be a different story. But if I'm market to market in the middle of this year, during this rate cutting phase, yeah, it's okay to be long bonds here. I would average in here. If yields back up here, as I expect they will, I mean, they're not going back up to 5, let's say, in US Treasuries. But if we morph from 4 to 4.25, max 4.5, I'd be averaging in on the long side.
There you go.
Okay.
We got the
Hey, Podrick, I think you're gonna have to send us a calendar with all these so we can keep track of them. Podrick, thank you so much. It's kind of early in London. I need some extra help too. That's ING's Podrick Garvey. Thanks so much for joining us early this morning. All right, Manus, a quick check on these equity markets. We are looking at equities fall. There you go. We promised you.
We got you the Russell. You're happy now, aren't you?
We promised you small cap fee. I'm thrilled.
You believe
this is
in
yet
that
another
breadth
big
trade.
reversal. They were up 2%, down again about 1%, so not a full reversal, but just a hint of reversal of yesterday's rally, Manus.
Yeah, quick snapshot on bonds. You just heard it there from Porg. He's prepared to take a little bit of 20-year government bonds, maybe even 10-year government bonds in the UK, but that's until halfway through the year. We're going to see a backup in yields. That's when you buy them. Yields tick a little bit higher this morning. You maybe get back to 425, 430. That's a suitable re-entry point, and bonds are fair value at 4%. Coming up in the show, the fallout from Boeing continues. United and Alaska find loose parts during the inspections on the MAX 9. We discuss next.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Now, our structures team examined the right door plug. So the door plug on the left is what expelled the aircraft. They examined the right door plug in its installed position today and found no discrepancies. Everything was in place.
The chair of the National Transportation Safety Board speaking in Oregon. That was last night on the latest inspection of the Alaska airplane, where shares in Boeing fell almost 8% on the day yesterday, the biggest drop since October 2022. And the company has issued new guidance to airlines on what inspections are needed, what's required to prevent another mid-air fuselage blowout like the one that we saw on Alaska Airlines late last week. Bloomberg's deputy editor for global aviation, Sid Phillip, joins Danny and I now. Those latest inspections, I mean, it fills me with a sense of dread, is that we're talking about loose bolts, we're talking about a number of installation issues. I mean, how difficult are these things to see? I mean, I thought that was the whole point of inspecting a plane before we got onto it.
Yeah, so at the moment they're inspecting to see all the bolts and to make sure everything's in place. And the fact that both United Airlines and Alaska have said that they have found loose bolts and other things, that essentially that is something that's a concern. But I mean, Boeing has issued steps for the airlines in order for them to complete the inspections and get the planes back into service. So it's just a question of seeing whether this issue can be contained by the inspections and get the planes back in the air.
And it's all quite awkward timing, especially considering we're supposed to get numbers for their orders and deliveries for 2023. I mean, Michael Leary of Ryanair just gave an interview to the FT basically complaining, we're not getting the deliveries we want, forget some of these nuts and bolts issues. What are we likely to see today in those figures?
Yeah, so we're looking to see what Boeing actually delivered in 2023 in terms of the 737 MAX, because that is their bread and butter. That's basically the plane that's the workhorse for airlines around the world. And everyone's really looking to see how many MAXes they delivered. They said up to about 400. So I think that's the number we're looking to see in terms of whether Boeing's been able to ramp up production. And that was before this latest issue. And everyone's been looking to see whether or not both Boeing and Airbus are able to get production up, especially as demand takes off and airlines look to replace older aircraft with brand new planes.
Right. Okay, Sid, thank you very much for keeping us up to date on that. That is Sid Phillips, our deputy editor for Global Aviation. Manis, we have some breaking news just crossing the terminal now. Microsoft's OpenAI ties are going to be facing potential EU merger investigation. Regulators at the moment are seeking views on competition in AI and virtual worlds.
Yeah, and they're going to investigate the investment by Microsoft into OpenAI. The stock is down by 0.6%, as you can see, at 372. The EU is also looking at big tech deals with the AI developers. So this is the beginning of a much broader investigation. I mean, you had the debacle of the management and Sam Altman exiting, the debacle over a weekend. You know, what would Microsoft do? That debacle put the valuation of OpenAI at question. And here we are again. The Europeans are now investigating, a full investigation, and it goes beyond OpenAI.
And it goes beyond just the Europeans. Both the UK and US authorities already, we learned in December that they were also investigating for competition issues. The CMA made it public. They talked about in the beginning of December. The FTC, it's not a formal investigation, but people familiar, Manus, told us that they were looking into it. All right, another corporate story for us to cover. Jefferies yesterday. It was not a good quarter, let's put it lightly, shall we? Profit dropped by half after what the firm is calling a transition year amid a slump in deals in 2023. Joining us now is Bloomberg's Jenny Serene. Yeah, Jenny, these numbers don't look so great.
Yeah, that's putting it lightly. So absolutely, it was a rough quarter for Jefferies. I think, you know, advisory being down, that's kind of their bread and butter. And it's been a slump kind of industry-wide. So this is not a Jefferies only story. And really what we think is this is more of a bellwether for what we're going to see later this week. So you've got Goldman, you've got Morgan Stanley next week. Just on Friday, we've got Citi, Bank of America, JP Morgan. So we think this is the first of many announcements like this to come where, you know, in those final 3 months of the year, we still didn't see that turnaround in deal making, and earnings are still going to be a rough quarter.
I mean, who led the pipeline last year? Do you think that the pipeline grows more considerably this year? Goldman were sort of at the top of some of those ranking boards last year, but is there going to be a real propulsion this year? We go into a rate cutting cycle. We've seen some big pharma deals, even in these first couple of days of the year. Novartis is on a buying spree. So what's the expectation?
Yeah, it's a good question. I mean, I think if you look at what Jefferies said yesterday, they noted that they've hired over 180 deal makers. So obviously they're looking for growth here. They're not backing away. They're not shying away from this downturn in the market. So it'll be interesting if we actually see anything come to fruition. You know, at the start of last year, we said somewhat similar. We thought 2022 was going to be the year, or 2023 was going to be the year of the rebound. That never quite came true. So we'll see if 2024 is the year for it. Certainly, you know, we've got a lot of healthcare deals being announced this week, so the animal spirits seem to be moving, but it's really hard to know, and yeah, we're only 10 days in, so hard to call it a turnaround quite yet.
Well, not part of Jefferies' business, but for those who have consumer-facing elements to their banks, Bank of America, the like, what is this quarter supposed to look like for them? Is there a turnaround in that part of the business, or is it a turnaround to the downside?
I do think we're a little bit more worried on that side, especially after the rate hikes that we had last year. We're a bit more worried about how those consumer loan portfolios are looking. So these banks have all already begun to telegraph that they're going to be setting aside a lot more in provisions to cover the souring loans in their books. And so I think the consumer element is still going to be a lot under pressure. You obviously don't have the M&A piece picking up for that. Trading also was another, you know, largely quiet quarter. So I think it'll be a lot more about the forecast when we have earnings this time. So I think a lot more folks are going to be saying, you know, 2024 is the year that we're going to see, you know, hopefully a bit of a turnaround on a lot of these fronts.
All of our hopes and dreams pinned on 2024. Jenny, thank you so much for joining us. That's Bloomberg's Jenny Serene. Manus, a quick check on your commodities this morning. We did see quite a large drop across the energy space, but as Max Kettner says, this is where you want to be buying because energy will rebound, which is not a great news for inflation. We got a rebound today. NYMEX crude dropped some 4% yesterday. Today it's trading by nearly 2% higher. Nat gas also dropped yesterday, again moving higher yet today. It was supposed to be a tailwind for inflation, these prices coming down, but that story being challenged today, Manus.
Yeah, you're looking at sort of selling pressure. I think we're looking at what Saxon, Ollie Hansen was saying. There is this selling pressure sub $75, $70. Hopefully that will hold on WTI as the floor. Coming up on the show, we're going to look at the market moving events for you on this Wednesday. What have we got on the slate for the bond market right here on Bloomberg? It is Tuesday. I'm a day ahead of myself, front running the days of the week. I'm that enthusiastic. Stocks are lower in Europe, down an eighth of 1%. It's shiny, it's beautiful, it's a winter's day.
the younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights.
How has that shaped your strategy for the bank?
Is this a new normal? Is this like a catalyst?
Do you think we're in a new phase for dividend policy overall?
That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It's Bloomberg Brief. Danny Berger in London, Manish Cranny in New York. Let's get you set up for your trading day this Tuesday. Here's what's ahead. First up, Fed Vice Chair for Supervision Michael Barr will be speaking on bank regulation. That happens at 12 p.m. That will be followed by ECB Governing Council member Francois Villeroy. He'll be speaking at 12:30 p.m. Eastern. Then CES 2024 kicks off in Las Vegas. Don't miss a special edition of Bloomberg Tech Live from the conference at 12 p.m. Eastern. I've never gone to CES, but I would love to. I just want to go there and play with all the toys. I'm pretty jealous of Caroline and Ed that they get that gig.
Yeah, exactly. Technology for all. I mean, there were some great interviews coming down the pike from them. But you're right. Well, we just got to find somewhere exciting to go. I fancy Miami, but then I think every reporter in this newsroom kind of fancies Miami, probably in February when it's really, really, really cold. But if you turn up at the end of January, you never know what I've got planned for the end of February. You could be in luck. You might be.
Just like as long as we're on a beach somewhere, I'm happy with that. Maybe we can report on some stock movers.
You're going to liquidate your Bitcoin
stock
holding.
movers from the beach.
Stock movers from the beach. Let's have a look at one of those. Juniper. I mean, let's a bit of seriousness here. We've got Juniper up 22%. They're in advanced talks to be sold to Hewlett-Packard Enterprise for $13 billion. Match.com, Danny.
Yeah. Owner of Tinder and other dating platforms. There's a report that Elliott has built a stake, $1 billion in the company. I've literally seen so many puns that are like Elliott swipes right on Tinder, and I'm just begging everyone, please make more ridiculous puns. I love it, actually. It's pricey. It's pricey out there.
cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the Celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead the the magic carpet, an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port
So
destinations.
functional.
Exactly, value functional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take to
How
do?
about the Instagram? Can you think about that?
I can
Kind of
imagine.
Instagram moment with the sunset, having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots and lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
The market's probably a little bit overdone or was overdone into the end of the year.
People dashed into this market. They extended the expectations of rate cuts.
Whether the Fed cuts with March or May probably is not that much of a big deal. It's that the Fed that is going to cut this year. I think that's what's important.
The idea that the market's got 5 rate cuts priced in, 6 last week, 5 now, that might be wildly optimistic.
I think there are a number of things that could come in and trip this market up a bit, but usually it's something the market doesn't see coming.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Sell-off, what sell-off? Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market slightly softer this morning on the S&P, down by 1/3 yesterday. The biggest one-day rally, TK, going back to the middle of November, the rebound of the last 24 hours.
So I saw one chart that says the Magnificent Seven made back 75% of the agony of the last number of days. I don't know what it was, but it was sobering for the people out there setting up for a clue. And to start with Ben Laidler this morning on the Magnificent Seven, on this Bitcoin ETF stuff, speaks to the enthusiasm that's out there.
You sound enthusiastic about the latter.
Don't get me going.
Yeah, I can't wait for
Ben
your
had
views
to
on that.
medicate me.
The earnings of the last 24 hours as well, Lisa. We need to talk about that too. Raising the outlook over at Lululemon, Abercrombie as well.
Yeah,
just a better
I saw that. It was
picture
in the
going
story
forward.
yesterday.
Festive activewear. Did you see that? That they had festive.
Is that what it's called?
Sort of theory-based, holiday activewear. And I was looking for pictures of it because I didn't see any festive activewear
for that.
at Lululemon. But nonetheless, they did increase their outlook. So that's what we're going looking
What
at.
does that look like? What does festive activewear look like?
It's on my, you didn't open my Christmas card.
Leggings,
Oh, right, those things.
Yeah.
I don't know.
Okay.
I've never seen that.
It's,
at
it's,
Lululemon.
it's
It
on my
seems
Christmas
sort of
card. It's a shot
I
of
didn't
me.
know Lulu did that.
I didn't know either, but they said that they had good promotions and they had a good kind of outlook going forward. Of course, I looked at Lululemon earnings. Of
Okay,
course.
good, yes.
I'm glad that we
Were they good? Are they getting it done?
Yes, but that's the whole thing. It's this question around, okay, well, people are still buying things that are too expensive than they should be, and they're still putting out the discretionary spending in areas like leisure.
Everything's so personal for you. I love that. Even shopping. Let's talk about Jefferies. The numbers from Jefferies really not great at all. Bramo, your thoughts on that, just going into earnings from JP Morgan and Bank of America this coming Friday?
So there are a couple of issues. Jefferies, of course, really takes more of its revenue from the merchant banking, the M&A, the bond and stock offerings, and we know that that's been really slow in 2023. So how much is this a measure of what we're going to see in JP Morgan versus the broad reach of some of the major banks? That said, talking about a trough, talking about a more than 50% decline in some of their revenues, really a bleak year at a time when we're hoping for a turnaround. We've seen that in the stock performance.
Swing over to private equity and private credit as well. And what you do in January is you look to February to get through bonus and keep your best people. Is where is the right sizing going to come from? Right sizing is one of the gentle words for this, but based on what I've seen so far, right sizing seems to be in order.
More on that a little bit later. Let's check out shares of Boeing. Boeing yesterday down 8%, biggest one-day loss going back to 2022, biggest one-day loss in more than a year. This morning, just about unchanged, but some unsettling news in the last few hours, I would say, Tom, from the likes of Alaska Air, United Airlines, saying late Monday that initial maintenance checks uncovered loose bolts, with the latter, United Airlines, saying there have been signs of installation issues in some of its aircraft. Yeah. Slightly worrying, just a bit.
Off of Spirit Aerosystems, I believe, of Kansas, George Ferguson was of immense value on this yesterday, and what he was speculating about 24 hours ago became true about 12 hours ago.
You don't want to hear that the screws are loose on the plane that you're about to get into. That's essentially what they were saying, is that the screws were loose in certain places, which is a big problem, and the reason why you're not seeing that rebound today, at least.
It doesn't limit flights, though. I mean, it's got to. I mean, if you're grounding X number of planes, I mean, you don't replace them. You don't dial 1-800-Airbus and say, you don't get over there and get new
We're
planes.
still trying to work out, Tom, how broad this investigation is going to be. And some unsettling stories reporting around that particular flight on Friday. The maintenance checks that were meant to take place, did they take place? Did they take place?
No, they had
the
lights.
warnings came up, yes, precisely. But how did they deal with those warnings, Lisa?
And can they just tighten the screws? Or do they have to do something else to really understand exactly where the
Lisa,
protocol is?
did you notice that John and I today on radio, it's tough to see, but, we're very matchy today.
I did notice that.
I mean, it's like,
I got an earful when I mentioned it, too.
It's good.
I didn't give you an earful.
No.
TK did. Come on. Let's get to the scores on the S&P 500. Equity futures negative 0.3% on the S&P, just pulling back a little bit. Up a touch in yields on a 10-year, up a single basis point, 4.0436%. And the euro, it's snoozy out there. We're negative 0.1% at 109.35. It's a great note from Kids Juice this morning, if you've read it over at SocGen, just about the data that's coming out of Germany. The data that's coming out of Germany just is not good at all. That over-reliance on Russian energy and Germany's industries' Achilles heel is now well understood, and maybe the German Statistics Office should stop publishing economic data anyway, because ultimately, every time it comes out, Lisa, it doesn't look good.
Calling them the new old man of Europe, which I knew exactly who he was talking about with that headline. We're watching today, Secretary of State Antony Blinken is in Tel Aviv. This comes after he visited Turkey, Qatar, United Arab Emirates, and Jordan. It's interesting that we're hearing that Saudi Arabia still is interested, at least according to Tony Blinken, in normalizing relations with Israel. It just feels like something is shifting and we're on the precipice of a new phase one way or another. 12 p.m. we hear from Fed Vice Chair for Supervision, Michael Barr, talking about banking regulation. Is there going to be some sort of furthering in the aftermath of March and the whole meltdown there, especially with any changes to the program that's basically been bailing out a number of banks for the short-term funding? And 1 p.m. the Treasury is selling $52 billion of three-year notes. I actually am very curious to see what the uptake is, because we just saw yesterday the New York Fed come out. The expectations for three-year inflation actually fell to the lowest since 2020. So do you see that come in with a bid into this, or is there something that is a disconnect between the sentiment and the market action?
This is why you wake up in the morning, TK, for that a little bit later. It's exciting. It's exciting. Ben Laidler joined us now.
Stop trolling me.
Global market strategist at eToro. Ben, great to catch up with you, sir. Let's get straight to it. Your line, momentum is a powerful strategy. Ben, just build on that. What do you mean by that?
Listen, there's a lot of focus on the weak start to January. January is typically, a strong month, so it's generated some nervousness. But I think it's frankly to be expected. We pulled forward huge returns into the fourth quarter. I'm still very bullish for 2024, but I do think it's going to be very different to the rally we saw last year. I think it'll be a bit smaller. I think it'll be back-ended. I think it'll be more cyclical, and I think it'll be more global. So I think we're looking for the rally. I think it's well supported on these sort of twin pillars of rate cuts and accelerating earnings, but I think it'll be very different to 2023.
Ben, I've got to rip up the script today with you, because eToro is really wedded to the idea of crypto as an investment asset. Crypto stocks and beyond is the banner headline from your shop. As we see crypto ETFs come in here, are they going to be part of your market analysis? Is Bitcoin an investable asset?
Yeah, I think it is. I mean, obviously, everything in moderation, do your research, be diversified. But, this was by far the best performing asset class last year, admittedly off a miserable 2022. And I think the interesting thing about the potential ETF now is it just broadens access to that asset class. And it's the first, I think, of many catalysts that are out there. We have an Ethereum ETF coming, with the Bitcoin halving coming, with the Fed cutting interest rates.
Right.
We've changed accounting regs in the US, which will make it easier for companies to buy crypto. We've bank regs, which will make it easier for banks to own crypto. I can go on and on. The point is that, I think, this is by far your smallest, youngest, most retail-dominated asset class. And I think it's very sensitive to any of these sort of growing institutionalization developments over the next year or so.
With a constraint on the supply of Bitcoin, can it become a member of the Magnificent Seven? I mean, do you see that kind of Laidler 3-year, 5-year appreciation?
We saw 150% last year, right? Which is 3 times what you saw out of tech. It's a 1.6 trillion asset class. I mean, it's smaller than, or similar size to any one of those names, with a laundry list of catalysts ahead, and I think a big, institutionalization story. From purely supply and demand perspective, I'm reasonably constructive.
Apart from Bitcoin, we're looking at a scenario where a lot of people still see big tech leading, or at least not falling behind, and that's going to be a big part of the back end rally that you see for 2024. How much are you adjusting and leaning in right now in any turbulence, or in other words, any dips whatsoever? Are you buying them? Are you kind of waiting to really get in a better time?
I think the big story for this year, actually even bigger than the overall market direction story, is the rotation story. Out of last year's sort of winners, the sort of big tech, defensive growth, teddy bear stocks, into the depressed, the cheaper, the out of favor assets that are most sensitive to the base case for an economic soft landing and interest rate cuts. So that's healthcare, that's financials, that's small cap, that's Europe, that's emerging markets. It's not big tech. Big tech is absolutely fine. They're growing earnings, but they're already growing earnings. We're not looking for the big earnings recovery. Valuation's already very high. That sensitivity is coming elsewhere. So by all means, hold on to some of your tech stocks, but I think the action for this year is coming from elsewhere, and that's what people should be looking at.
I've never heard of tech stocks referred to as teddy bear stocks. I am curious, going forward, when you talk about financials, we just got Jefferies' earnings, and they were not great. They expressed a lot of hope that things are going to get better. There's a feeling that M&A can only go up, IPOs can only go up. Some of the other issuances, similarly. How much is that part of your bullish thesis on financials, and how important are JP Morgan's earnings on Friday?
Yeah, so I think for this rally to keep going, and the reason I say it's back-ended is because the two twin pillars of rate cuts, I think, we're all debating how many and when, et cetera, but, they will be started by the second half of the year. And secondly, this earnings acceleration, this idiosyncratic earnings acceleration, because it's going to come even as the economy slows, I think there's more of a second half story. So I fully expect bank results to be absolutely miserable. Consensus is down, 20% plus. They're going to take loan provisions. They're not seeing any capital markets activity. It's darkest before dawn. But I think, we're going to start lapping that as we move into next year, as interest rates start to come down, as the economy begins to firm up in the second half. So it's the earnings delta I'm looking for. I'll just give you one example. Europe, which is financials, is the biggest sector. Earnings were down 10% last quarter. By the end of this year, they should be up 30 to 40%. And you're seeing that sort of earnings delta across all these cyclicals. And I think that's what people should be focused on as we look for the soft landing and we look for interest rate cuts.
Ben, do you think that trade has already begun, already started, maybe even close to completion in Europe after the rally we've already seen?
It's absolutely started, but it has a long, long way to go. Look at the valuation gap. Even if you sector adjust it, is absolutely enormous. Earnings are still, as they say, very depressed and set for just a huge swing, which I think is underappreciated. So I think we have a long way to go. Remember, these assets have underperformed for literally decades, and they're also tiny. A little bit of money coming out of supersized US markets or tech markets goes a very, very long way in some of these smaller asset classes and assets.
You've just got to give up the teddy bears, which, as you know, Ben, It's difficult. It's difficult. Ben Laidler of eToro. Ben, thank you. I've never heard that either, Bramo, but I like it. Teddy bear stocks. You sort of hold them close.
Yeah, cuddle at night.
Rewarding.
Cuddle at night.
Sleep well at night.
No, Lizanne Saunders, seriously, Lizanne Saunders is very good at the teddy bear sector. This is Steve Ross out of MIT, and when he did factor analysis, he has momentum, value, some of the other stochastic issues, and then one of the sectors is the teddy bear sector.
No, real deal.
Yeah.
No, I understand. Yeah.
Up at MIT.
I read that chapter.
Yeah.
It's an important book.
Saunders did a dissertation in Delaware on that years ago.
Honestly, Tom could say anything with a straight face and most people would believe him. In the next hour on Bloomberg TV, Emily Rowland of John Hancock Investment Management. Catch up with Emily a little bit later. We need to talk
John
about...
Hancock, he wrote a big signature on the Declaration.
I did say that, right?
Yeah.
Sure. I'm not sure what's that got to do with anything.
Are you doing the big circles?
The big signature of John Hancock. You learned that as a kid.
Okay.
One of the great sadnesses of Boston is they tore down his house. It was a terrible.
This is quite a tangent. All right, are you done?
I'm done.
You
Okay, good.
want a teddy bear?
No, I think someone else wants a teddy bear. Okay.
John Hancock did not wear Lululemon.
Terry Haynes of Pangea Policy coming up next. We need to talk about policy. Janet Yellen wading into the debate about rate cuts, or rather tax cuts, and whether they should be extended or not. More on that still to come. From New York City, this is Bloomberg.
London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
DOJ or other authorities
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
The 2024 nominating contests are here, and the candidates are making their cases to voters in Iowa ahead of the caucuses. Bloomberg is live in the ground, bringing you the fastest news.
Trump is leading by a long shot.
Insightful interviews.
And at the end of the day, that's what the American people want.
And the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
It all starts Monday in Iowa, only on Bloomberg. Context changes everything.
Our strong preference is that the Houthis get the message that they're receiving from countries around the world that this needs to stop, and that's what we're focused on. It's clearly not in the interest of anyone, Israel, Lebanon, Hezbollah, for that matter, to see this escalate and to see an actual conflict. And the Israelis have been very clear with us that they want to find a diplomatic way forward.
That was US Secretary of State Antony Blinken addressing these situations in the Red Sea and the rising tensions in the Middle East, continuing his shuttle diplomacy trip in the region. We can't talk about that without talking about this, the curious case of the missing defense secretary. The response from Congress has been pretty strong, TK, let's put it that way. Republican Senator Susan Collins saying this: given the extremely serious military decisions that the United States is dealing with, including attacks on our troops by Iranian-backed proxies, the war in the Middle East, and the ongoing aggression by Russia in Ukraine, it is inexplicable that the secretary's condition remains shrouded in secrecy. Democrat Seth Moulton saying this, Tom: the fact that this occurred with the secrecy of defense and his own deputy, let alone the president didn't know, is astounding. Still trying to work out the details of this one.
You know this, John, early yesterday morning when all this broke, is it's going to get worse, and I think the worser continues. I just don't understand how this goes away for the president of the United States.
I want to read the play-by-play as you were talking about, just in terms of, especially as we were hearing about some of the attacks that were taking place in Iran, and at that celebration or the memorial on those attacks. I mean, at this point, why was the defense secretary not in conversations with the White House?
Precisely.
And if they weren't, who was? How is the communication getting transmitted? And if this isn't the case, if they don't give this information, how does Joe Biden continue to stand behind him and say he's had full faith in this individual?
That was what got my attention yesterday, Tom. If you go back to the play-by-play of last week, what we do know, there was the terrorist attack in Iran on the Wednesday. And I find it difficult to believe that no one in the White House reached out to the Pentagon when that was going on, trying to get details. And it was only until Thursday, reportedly, that the president realized they didn't know where the defense secretary was.
And there's a historic overlay on this, John. I took it back yesterday to Woodrow Wilson, but there's just no question about it. It is part of our fabric. What do you do in terms of the chain of command, I should say, of the nation? Terry Haynes briefs now, founder of Pangea Policy. Terry, you and I learned in Civics 101, this started with Mrs. Wilson. Woodrow Wilson had a series of strokes really going back to the 1890s. And then there was a penultimate stroke, I'm going to say 1919. He lost sight of his left eye and onward. We have a history of this. And critically, we have a legal process for the president, the 25th Amendment and all, that does this. What should the Secretary of Defense do? What's his duty this morning?
I think fundamentally his duty is to resign, and I think fundamentally the duty is among those of White House staff that are involved in this sort of chain of command and tracking people to stand down as well. You all covered it very well, and the word astounding is absolutely the case. For markets, what my view is that, regardless of what you think about Biden's age, potential infirmity, anything else, regardless of that, people are comforted by the idea that, there's a competent professional staff underneath him, a cabinet around him. If neither of those are true, that's a geopolitical risk spike and a problem all by itself.
Am I correct that there's a comfort now to resignations at the administration, or frankly in other parts of government, because we're so near the election? Now's a good time to exit, isn't it?
Yeah, I think so, probably. And certainly Secretary Austin could do other things similar to what retired military officers generally do, serve on boards and then lecture and the like. But somebody's going to have to take responsibility for this. And, there's been an awful lot of smoke coming out of the White House and reported that, Biden's famously loyal, Biden's going to stand by his guy, all the rest. They're going to figure out, they should have figured out already and haven't, that's not going to stand. And they need to place a different look on this. If you wonder why, for example, the Israelis aren't paying very much attention to White House preferences on how the Gaza war is conducted, look no further than the White House and Secretary of Defense situation, frankly.
Terry, it's such a powerful point. Typically, this is a question that I think conspiracy theorists like to probe, but I think it's pertinent, important in the last 24 hours. Who's actually running the government?
We don't know, do we? And that's a little disquieting all by itself. If you have a situation, it goes farther for those viewers who haven't seen this. Secretary of Defense is out of action. The Chief of Staff is indisposed. The Deputy is on vacation. I mean, it's not just Austin. And the idea that the White House had no idea, and the White House supposedly has tracking systems in real time, the idea that the White House had no idea where its Secretary of Defense was is mind-boggling, and that's not a word I use frequently.
Which raises the question, especially because you're talking about Lloyd Austin and how you think he should resign. Who takes his place? Is there another person who has familiarity with what's going on to have the continuity necessary to really engage with some really difficult international issues?
There's a lot of potential candidates out there. You know, there's a lot of 4 stars. There's a lot of people on very much active duty. One person, and I don't want to sort of put him out there on his own. One person that comes to mind when you ask me that question is somebody that already does a lot of work with Bloomberg, Admiral Stavridis, who is very, fits that template very well. Somebody who's been a flag officer, but also understands very well the sort of geopolitical challenges that are faced, and would bring a command posture to the position that's desperately needed now.
Terry, I wanted to squeeze this in. The contours of the policy debate coming together in election season. Secretary Yellen weighing in. I thought this was interesting in the last 24 hours. Said extending all the 2017 tax cuts won by former President Donald Trump would lead to, quote, serious concerns over the federal deficit. Are we just setting the foundations, the stage, Terry, for that battle to take place over the next few months?
We're setting the foundation for the election and for a 2025 battle. But my advice to markets has been, since Yellen was appointed, that you shouldn't look at Yellen as some sort of independent actor anymore. She's a Biden soldier, and her political capital that she had when she was an independent actor in Washington is no longer hers. It belongs to Biden. So, my view of that is she's being a good line soldier and saying, we can't possibly have tax cuts because it would increase the deficit. That's Democratic orthodoxy.
It's sounding more and more like a politician. Terry, thank you, sir. Terry Haynes there of Pangea Policy. Lisa, weigh in on that. Treasury Secretary Janet Yellen saying extending all the 2017 tax cuts would lead to, quote, serious concerns over the federal budget deficit.
I would continue that on by saying, what else would be a serious concern? Would it be that borrowing costs remain at the levels that they are now, considering that will lead to a massive surge in interest expense? What is the threshold between totally sustainable and serious concern? That's what I want to understand from her.
In the confusion, we should note that as Secretary of Treasury, this is her field. She's supposed to comment on things like this. What's interesting is if you have a former central banker as Treasury commenting on monetary policy, or Jerome Powell commenting on fiscal policy. In the old days, that was confusing. I guess the old days are gone.
Well, hold on a second. I actually think that she was really smart in the way that she adjusted issuance, and she actually staved off some sort of revolt by bond investors last year by the fact that she then issued more T-bills rather than longer-term debt in order to not necessarily flood the market with coupon issuance. But this year changes. And that's when you start to see maybe the U.S. government have to lock in borrowing costs at a much higher pace and face off with much higher interest expenses, and she will have to come.
I think it's a really important insight in that they had the confidence to go short term. And now what is a huge mystery, huge mystery.
I'm sure there's people screaming at the television set right now, asking, well, what happened to issuing long-term debt when rates were like near zero? I'm not sure we should give the Treasury a round of applause for its maturity profile management.
People say
of
that
the
they
US
increased
debt.
it, but they didn't increase it as much. I know. It's like 100-year debt. Where was that?
From New York, this is Bloomberg.
much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Biggest one-day rally on the S&P 500 going back to the middle of November in yesterday's session. This morning, pulling back by 0.4%, just a touch softer on the S&P and the Nasdaq. We're down 0.5%. On a Russell, the small caps getting punished, down a little more than 1%. The next stop for this market, CPI, Thursday, earnings on Friday. The numbers out of Jefferies. Not great yesterday, Bramo. Not great at all.
You saw actually a 53% drop in the earnings revenue for the period compared with a year earlier. Not great, but they said this was the trough. And it looks bright ahead, and you can see the resurgence and potential deals, and everything's got to get better. Great. That is the hope that's being baked into a lot of financials.
Speaking of hope, I just loved the line from Ben Lader of eToro a little bit early this morning. Teddy bear stocks. The ultimate teddy bear stock of the last 24 hours, the last 12 months for that matter. NVIDIA?
Yep.
They just have to say, yeah, new product. I don't think you even have to read what the new product is sometimes, Lisa. I think you just say new product, and they're like, new product, bye.
You're literally reading my mind. I saw that. I looked at how NVIDIA really led the gains yesterday, as they have for the past 12 months, as you pointed out. They rolled out new chips. They talked about more processing abilities, and woo!
My best conversation in the new year on this is Anurag Rana of Bloomberg Intelligence, truly expert on the cloud, and the phrase he uses, John, for all these fancy companies and stuff I don't understand, is addressable market, which is the guesstimate of what the future market is out 5 and 10 years. And the fancy word, John, is ginormous.
That's the equity market story, Tom. A few more asset classes to get through. Let's move to bonds. 2-year, 10-year, 30-year. Yields on treasuries shaping up as follows. Up a single basis point. Still just above 4% on a 10-year. 4.04%. If you turn to foreign exchange, it's a snooze for the euro. It's always a snooze at the moment, isn't it? 109.31. We're negative there by about 0.2%. But the data, look, the data out of Germany, at least I know it's November industrial production, for whatever that's worth, but the trend is clear. It's not great data.
You know, I spent a lot of time thinking about this last night. The problem is, what's being priced in? What is the expectation? We know that German industrial manufacturing is under pressure. We know that there are some issues with energy. We know it's been a tough slog. What's being priced in? And I think that's part of the problem with the reason why the euro dollar's been basically somnolent.
The hope that even if the data's bad, Tom, that ultimately the ECB is about to cut interest rates. That's where the hope is, I think, for many.
Well, the hope on the ECB is simple. Carl Weinberg with a blistering note this morning, John, that has to do with your trip to Davos. He says they're at 1.9% inflation right now. They're way, way behind. And Weinberg minces no words. Davos is an opportunity for Lagarde to pivot. It's a time for her to make a statement on this.
On the schedule a few times.
Yeah.
Next week, you'll hear a lot from the ECB president. Let's get to the top stories. Under surveillance this morning, Boeing suffering its worst day in a year as the investigation into the Alaska Airlines incident widens. Both Alaska and United Airlines saying initial maintenance checks on other 737 MAX 9 aircraft uncovered loose bolts. United saying there had been signs of, quote, installation issues. The National Transportation Safety Board not ruling out a wider investigation into the aircraft. Yesterday, the stock down about 8%, muted price action this morning, but I tell you what, some really unsettling reporting Lisa, from a few of these companies?
Especially because the light had been on and they didn't really know exactly what happened. One of my favorite parts of the story, and I realize it's a tangent, is the 64-year-old physics teacher who found the plug in his backyard, and he was talking about how the 50-foot trees acted as air cushions to really keep it intact, as well as the iPhone that fell out as well.
Oh, yes, of course.
Basically, that's the reason why those things didn't explode. But it's just basically such a blessing, if nothing else, that nobody got seriously hurt. Question now is, where does Boeing go forward? Whose fault is it? How do they really reignite some confidence?
I had a personal bias here. My father did a lot of work with Boeing, with Hughes Electronic, which was their satellite company they bought years ago. This goes back to 1997, and at the time, the shocking merger, John, of Boeing and McDonnell Douglas. And the answer is, I did a fancy Bloomberg chart on this, and here's the core question. What's happened at Boeing since 2016? I can't answer that. We're not doing a McKinsey thing here, but something changed in the pixie dust on or about 2016.
You're not the only one asking that question, eh?
Right.
Let's turn to that single aircraft. That aircraft. Lisa, if you knew that an aircraft you were getting shouldn't be flying over water to places like Hawaii, but it was okay to fly domestically over land, would you get on the plane?
So here's the thing, and this is sort of the leap of faith of flying, is that you have to kind of trust it, because not everybody understands aeromechanics, and everyone's going to say, well, I'm sure that they signed off and it's just fine. But you're right. If they're going to basically say, like, well, you can only go up to, 15,000
Don't fly to Hawaii on this one.
Yeah, this one might not make it. So,
I know we got to move on, but for those of you on radio, the video here on television of the duct tape and the plastic around the hole is like, it's like where you screw something up at home and you're trying to.
The more you find out, the more concerning.
I mean, this is not funny.
It's not funny at all. It's only funny because there wasn't any serious injuries, Tom. But we're like this close to having a real accident, it seems. Let's turn to this story. Lawmakers demanding answers as the mystery remains around the absence of Defense Secretary Lloyd Austin. Austin failing to notify the White House for 4 days after being hospitalized on January 1st. And the Defense Department has still not disclosed why Austin is still at Walter Reed. The White House standing by Austin, ruling out any possibility of him losing his job. Terry Haynes of Pangea on the program 10-15 minutes ago, saying the man should resign. More to come on that particular story. Want to finish on this one. Some good news for the people of Michigan. A 26-year drought is over. The university winning the college football national championship game, beating the Washington Huskies 34-13. It marks a 12th national title for the Wolverines. TK, the first since 1997.
It was incredible in the third quarter there in the huddle there, and they have the microphone in the huddle like they do because it's a big game, and the quarterback's going, let's do the Psalm rule.
It's not what happens in that.
Claudius Psalm was right there in the middle of it with Justin Wolfers.
You can tell no one around this table watched that game, can't you?
Justin Wolfers was there. It's not Australian football rules.
Well, Wolfers probably was there.
Well, he was.
Probably was
guys are such a study. Was probably
crushing this.
We're going to move on from college football to the excitement of foreign exchange. The euro has been somnolent. Jane Foley is never quiet, head of foreign exchange strategy at Rabobank. Where is the excitement right now, Jane Foley? Where's the movement in the next 90 days of a foreign exchange pair?
You know what? I think you can get excitement, maybe not in euro dollar so much, but look at the yen. I think that's been pretty exciting today. What about the Swedish krona? What about that Swiss franc? It was back to the strongest levels that it's seen since that amazing day several years ago when the S&P stepped away from maintaining that 120 floor. So there is some action here, but it is quite disappointing that euro dollar is not perhaps brought us the excitement that many of us had anticipated.
Jane, what I'm looking at, I'm triangulating Swiss every day. Trade rated Swiss, Euro Swiss, dollar Swissy as well. Let's cut to the chase. What do you suggest the SNB will do if we break through new strong Swiss franc?
That's, I think, a really important question, and one that's perhaps not been asked enough, because I think we're in danger, perhaps, of looking at Switzerland in the same way that we're looking at most of Europe or the US, where we've had, significant inflationary problem in recent years. I think it's really important to remember for Switzerland, like Japan, that over the last few decades, they really had issues with deflation, disinflation, and whilst inflation right now is just below 2%, is in a sweet spot, I think they're going to be a little bit nervous about going back to seeing too much disinflation over the next year or two. And I think if the Swiss franc does continue on this course of strength, that will become potentially an issue, during the course of this year. So actually, I would say perhaps in contrast to what I'm saying about most other central banks in the G10, I think there's a risk that the SNB will bring forward interest rate cuts. And at a time when I'm actually suggesting that for most other central banks, I think the market's priced in interest rate cuts too early.
Jade, I'd love your help. The value of Fed, ECB, SNB speak right now at a time of incredible economic uncertainty, at a time where a lot of people are just ignoring any of the signals and words that some of these central bankers are saying. We did hear from a number of Fed bankers this week, including Raphael Bostic of the Atlanta Federal Reserve, as well as Michelle Bowman, a traditional hawk, who came out and basically talked about how, yes, she'd be interested in cutting rates, but really pushing back, saying that if inflation stays high, they might have to hike again. Do you pay any credence to any of the hawkish rhetoric in the pushback we've been getting on the margins from the Fed?
Yeah, I do. Now, the SNB and the Bank of Japan aside, so, put those two aside because they're different. Otherwise, I think we really do have to pay attention to these inflationary threats. So, for instance, think about the shipping that's now going around the Cape of Good Hope, around Africa, and rather than the Suez Canal. Who's going to pay for that? Who's going to pay the additional insurance premiums that that shippers have to now pay for shipping? Who's going to pay for the fact that for months now we've had a limited shipping going through the Panama Canal because of the water shortages? Who's going to pay for those additional insurance premiums because we've had extra flooding, because there's been drought? All of these different climate change issues going forward. So I don't think supply chains or supply chain disruption, yes, as we knew it in 2020, that's gone. But I think supply chain disruption in some form because of climate change or geopolitical risk is still here. That's inflationary. We've also got an aging population. That means there's labour market shortages. That means that there's probably going to be opportunity for more labour market strife and for more higher pay increases throughout the US and Europe, where the population is aging. So I think that we are in a different economic environment than we were 10, 15 years ago. I think it is a higher inflationary one, and I do pay heed to some of those hawkish comments, and I do think the market is too optimistic, really, for majority of the G10 central banks in terms of interest rate cuts.
Jane, do you think that there is really any chance at all that either the Fed or this ECB could even hike rates further if there are material supply chain disruptions or if oil prices go materially higher?
I'd like to say no, but I don't think, I think it would be foolhardy to completely rule out that chance, because, we just don't know what's going to happen on, say, the geopolitical front or the climate change front, but I would say that the answer is probably not. But there's got to be a slim chance. I would not want to say 100% certain that they would not hike interest rates again.
So, Jane, let's wrap it up. Favourite trade for the year ahead? What is it?
I think sterling is going to do better than the market is anticipating. I think there's just too much gloom priced into the UK. It's almost become habitual for people like me to be really bearish on sterling. I think that's probably overdone. I really don't like the euro, and this is related to problems aside from the dollar. This is related to problems with the German economy. I think if inflation can be kept in check in the eurozone, I think that Europe needs a softer euro, and I think that's going to be the case for the number of years, just to compete, just to increase its competitiveness because of these issues, with higher energy prices, etc. And of course, the yen is interesting. And at the end of last year, everyone really was saying that the yen's going to be really, really strong. I think it will strengthen to some degree, but I think it would disappoint the bulls.
Still waiting for those rate hikes. Jane, thank you. Good to catch up. Jane Foley there of Rabobank. Does not like the euro. I want to go back to what we heard from Kit Jukes of SocGen this morning. On the German Statistics Office, they should stop publishing economic data. Because, Lisa, it's been absolutely dreadful over in Germany.
So they should have a Communist Party of China kind of response to it.
A CCP approach to economic transparency.
Just basically youth unemployment, German fundamental economic data. Here's the issue, is that how much of this is priced in, right? How much are people expecting some sort of resurgence in German industrial production? Where is the growth going to come from? Has that fully been priced in, or are people expecting that to somehow just shift back to the normal relationship between Germany and the rest of Europe?
The German business model, Tom, celebrated for so long, has failed on several fronts.
Yeah,
and you're seeing it show up in the data repeatedly.
Yeah, the key word there, John, is several. It wasn't just one thing that made this unravel. What I hear from our experts is they continue to go back to the China debate, the idea that the linkage of China with Europe is radically different right now.
You see what Brahma just did?
In the U.S. She dropped her Tang.
Poured water all down my
It was
soup.
Tang Zero.
I did
No,
not. It didn't
it's
touch your
sticky. Be
suit.
careful. It's Tang Zero.
It's seltzer. It's
Seltzer.
sparkling water.
It'll wash out.
Seltzer,
It's not a big
that's
deal.
New York
It's okay.
Did
it actually-
It'll dry.
did it-
It'll dry. It's not a problem.
Okay.
I'm very cool, relaxed. Brooke Sutherland is coming up on Boeing. She didn't spill it. Don't wait. He didn't really. Just a little splash. Just a spray.
Just to wait.
Just a bit of a spray.
Another Tang Zero? I got Tang Zero here right
It's
now.
okay. I like seltzer.
Boeing in yesterday's session, biggest one-day drop going back to October 2022, a drop of more than 8%. Boeing's worst day in more than a year. This morning, Boeing almost totally unchanged, but the spotlight, they can't get away from it. That conversation up next with Brooke Sutherland of Bloomberg.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compaq merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
What does it take to be a great surgeon? This may sound trite. Perseverance, resilience, in practical terms, being able to take a blow and not having it become a permanent deformity, and grit.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
We need to first and foremost figure out what happened here on this aircraft. If we have a bigger system-wide or fleet issue, we will issue an urgent safety recommendation to push for change. We don't know if there were bolts there or if they are just missing and departed when the door plug departed.
The more they talk, the worse it sounds. That was Jennifer Homendi, the National Transportation Safety Board chair, on the investigation into the panel blowout of Boeing's 737 MAX 9. Alaska Air and United both finding loose bolts from a number of their MAX 9 fleet after preliminary checks. Just unbelievable. Boeing yesterday, bad day in this equity market, biggest one-day drop since the back end of 2022. This morning, Boeing is negative by something like 0.9%. But Tom, honestly, you hear from the airlines, it's not sounding great. You hear from the investigators, it doesn't sound too good. It's going to take a while to figure out what happened here.
It's going to take a while. There's going to be an adult investigation, and always new things come up in the investigation, and critically, things we assume are pushed aside by adult engineers. And there is a history of us really doing better than good at this, so there can be some optimism about the quality
There's three companies, though, Tom, I think we still need to talk about. There's Boeing, the Spirit Aerosystem, and then there's Alaska Airlines. And I want to work out, Tom, if there was a red flashing light that was coming up on that particular aircraft.
Yeah, where was Alaska on that? Yeah.
What was done about it and who was responsible to check it and follow up and make sure it was addressed?
We're going to see, in the first person that I thought of when I heard of this very serious failure, engineering failure, was the gentlelady from Kansas. Brooke Sutherland knows this cold. She's Bloomberg opinion columnist, and she knows that Clyde Cessna in 1916 invented our aviation world in Wichita, Kansas. So we're going to go to Wichita right now and talk about how we actually build the things we take for granted. How shattered is aviation Kansas this morning, Brooke? How, not afraid, but just how is their confidence broken?
I think you have to be rather concerned in Wichita. I mean, that is the home of Spirit Aerosystems, which is the supplier that makes the fuselage on the Boeing MAX. Now, this is not, it's not clear yet if this was a Spirit issue, but they have had a history of quality control glitches just in this past year, really. And there's a lot of scrutiny over the relationship between Boeing and Spirit Aerosystems. This used to be a part of Boeing until back in 2005, executives decided they could boost their profit margins by focusing on design and outsourcing some of the actual manufacturing work. But this was really just a set of factories. This was never really meant to be an independent business. And I think this relationship is going to get a lot of scrutiny. There's been speculation of could Boeing buy Spirit Aerosystems? I think that would be very complicated considering Spirit has since diversified into contracts with Airbus and the military. But I do think both Boeing and Airbus down the road are going to look at vertically integrating more of that aerospace structure's work because it's just not a tenable relationship.
Is this enough for Airbus to get a legit foothold into American aviation?
I mean, I think they have one. What's interesting is that Airbus has remained much more vertically integrated than Boeing ever has. They've outsourced some stuff here and there, but they have not done it to the extent that Boeing did. And in hindsight, being 2020, that was clearly the right decision.
I'm wondering the decision by the airline companies of which planes to buy, why it is that United and Alaska Air had a disproportionate number of these particular jets. Is it just the routes that they decided to fly on? Was it just simply availability? Was it the cost?
I mean, I think it's a little bit of both. The reality is we have a duopoly. It's Boeing and it's Airbus, and Airbus is sold out of its marquee narrow-body jets into the 2030s. I think, you know, depending on the routes you want to fly, fuel efficiency, engines are also a concern. So the MAX jet only takes the engine from CFM International.